Good morning, Chair. We are back, Chair.
Yes, my other gadget has got a problem, so Coliso, can you then flight the agenda?
Okay, Chair.
As they flag the agenda, can I then request members to observe a moment of silence for meditation or prayer? Thank you very much. Let me take this opportunity to welcome honorable members and the entities that we are going to meet today, the chairs and the CEOs and CFOs. You're warmly welcome to this meeting. This is a continuation of the meeting that we have started last week, looking at the annual report of the department and the outcome of the audit report as presented by the Auditor General. Can we then note the apologies, Koliswa?
Good morning, Chairperson, members, and good morning to our guests. I received apologies from Mr. Malachi and Dr. Kumalo, also from the Minister and the Deputy Minister of Human Settlements. Thank you, Chairperson.
Thank you very much. Can I then get members to move for the adoption of the agenda as tabled?
I move the adoption of the agenda, Chair, as tabled, noting the apologies of the leadership. Thank you.
Chairperson.
Thank you very much. Without wasting time, let me take this opportunity to welcome Dr. Rashitanga, the chair of HDA, to make his remarks, and then would follow by the CE to make the presentation. CE, you have 30 minutes to make your presentation. Dr. Rashitanga, the 30 minutes is not included on your remarks. You're welcome, you can proceed.
Good morning, Honorable Chairperson of the Portfolio Committee and all the other members of Parliament and
recording in progress.
The colleagues from the HDA as well as all the other entities. Good morning to the senior management in the Department of Human Settlement as well. May I request that the presentation be flighted?
Who's going to flight the agenda, the presentation from HDA? I want to share, I want to give her the rights.
CEO, can you give guidance?
Chair, I will flight the presentation. Joy Master Mola, if they can send me the rights.
Okay. You can now share.
Yes, please go to the first slide in the executive presentation slide. Yes, members of panel of parliament, the honorable members, we appreciate being invited to make this presentation on HDA annual performance, as well as a focus on the audit outcomes and the action plans thereof. Just by way of context, we would like to remind members that this annual report that we're presenting for the board that I am representing, we came into office on the last quarter of this annual report on performance, and the CEO and CFO that are with us in this meeting would have been appointed during that period of November 2021 until March, April. But we own up to it, because when you take over an institution, you immediately have to deal with all the matters that are at your disposal. But it's important to indicate that we took over an organization that had been unstable, with a number of administrators having been into office in the period of 2021 alone, the period during which the annual report is being presented. We had two administrators in the form of Mr. Cheney and Dr. Mahapa, and the board was therefore non-existent, and the only committee that had been in existence was the Audit and Risk Committee. Honorable Minister Kubai appointed the board in November 2021, and at the time we had an acting CEO, Mr. Stephen Poya, followed by Ms. Daphne Mwashe. So we also had two acting CEOs during that period. It was very clear what our marching orders were when we were appointed as the board. It was to stabilize first and foremost the administration of the organization by way of ensuring that we appoint a substantive chief executive officer and CFO, who would then take the organization on board and make sure that the organization functions optimally. Since the appointment of the CEO and the CFO, there have been a marked improvement in the manner in which the organization functions. There are matters that were ongoing, for example, disciplinary matters involving executives, which added to the instability that the organization was facing, and those have since been concluded. The organizational structure had not been revised and reviewed since 2016. And this was also an urgent matter because it was stifling progress in terms of clarity on what kind of capacity was required in the organization. The organizational structure has since been finalized and is awaiting currently ministerial approval. There had been a moratorium on the filling of posts because the board had felt at the time, it was both the administrator and the board, that it is important to have the substantive executive CEO and CFO in office to preside over some of the critical posts that needed to be filled, because continuing to do so may have just added to the crises that were taking place in the organization. But we have swiftly lifted that moratorium, and already in the past 2 months or so, some of the critical posts have been filled that are necessary for the stability of the HDA. We also inherited a lot of audit findings, which were linked in by and large to irregular expenditure, and without a very proper focus on how to deal with them. The irregular expenditure register is now fully in place, and a condonation committee that looks at all the irregular expenditures from way back, as far back as 2017, 2018, as the CEO will report, is now underway. The investigations are underway. The quantity of the amount that is implicated in those irregular expenditure is established, and the ongoing investigation is reducing the looking at the transactions that relate to that amount. As much as that is not yet completed, the CEO will indicate how far we are with that. In the first quarter of the current financial year, there has been marked improvement in performance because our annual report presentation today will demonstrate that the organization had been performing very dismally, I think at 29%. But ever since all these interventions that I have alluded to, we are seeing improvement even in the performance of our annual performance plans at 61% first quarter, and I think second quarter is already at 72%, as the CEO will mention. This is by and large because of a turnaround plan on project management. On a weekly basis, the executive tracks the progress on projects to make sure that we focus on identifying blockages and take action. So with that having been said, Honorable Chairperson, let me then, through you, respectfully ask through you to request the CEO to make the rest of the presentation. Thank you.
Thank you very much, CEO.
Thank you, Chairperson. Good morning, Chairperson of the session. Good morning to the HDA board and the boards of the sister companies, the portfolio committee members, and my colleagues in other
CEO, is it the first time that you are presenting to the committee?
Yes, Chair.
Yes, can we see your face so that members can see whom they are talking to, and then you can then switch off the the camera after that. Okay.
Yes.
Thank you very much. Okay, thank you very much. You can proceed.
Okay, thank you, Chair.
Yo, that was very quick, Chairperson.
Yeah. No, thank you, Chair. Chair, as the Chairperson has already said, we've given the highlight of where we are. These are the 6 pillars that we are focusing on in terms of our mandate, and then at the main, the issue of us being a property developer of choice for government. We're moving ahead with that. And then in terms of the new structure that we have sent to the minister, we have also highlighted the need to start this process. And then we're hoping that the minister will look at the structure favorably, more especially that we should be able to implement the mandate of the property developer. And then also on the issues of governance, as the chair said, that's where we're focusing in the most. We as you would know, we got a qualified audit. We're then moving too quickly to make sure that we achieve an unqualified. And one of the things that we have done is that we have since appointed a senior manager supply chain, because when we get to the granular detail, you'll see that one of the challenges we're sitting with is in the supply chain. But we've also looked at it from an audit, and then we can also safely report that we've appointed the chief audit executive. So in terms of all the 6 pillars, we are focusing on them and making sure that we will get them through. One of the findings that was raised was in terms of our asset register and the document management. We are already in the process, Chair, of making sure that we automate our document management system and then also our asset register. So from a process and systems point of view, we are fully looking at that. Chair, the chairperson of the board has already said we did not perform well last financial year. Our total targets achieved was 29%, and targets not achieved was 71%. And then if you look at the structure all in all, you'll see that HDA totals, we had 34 total number of KPIs. Of the 34 number of KPIs, we achieved 10, and 24 of those KPIs were not achieved. But if you then go deeper into each one of them, you'll see that program 1, it deals with administration. And then from administration, we had 9. Out of the 9, we achieved 1. And then total targets not achieved is 8. And then on program 2, we had 5 KPIs. Of the 5 KPIs, 2 were achieved and then 3 were not achieved. And program 3, we had 19 total KPIs. Of the 19 KPIs, we achieved 7 and then 12 were not achieved. When we get to the granular, we'll then show as to what we mean by informal settlements upgrading, which ones were this, and then the catalytic will also get to there. And then the regions also talks to the 3 regions that we have, the region A, B, and C, and also the targets that were given, it will also show in terms of how the regions are performing. So when you go to program 4, which deals with planning, monitoring and evaluation and IGR, we had 1 KPI there, and then unfortunately the KPI was also not achieved. So all in all of the 34 KPIs, 10 were achieved and 24 were not achieved. So here we are just doing a grammatic analysis of that, and then we're also showing it in terms of just each and every quarter as to how we were performing per quarter. If you look at quarter 1, the achievement was 23%. And 77% was non-achieved. Quarter 2, we achieved 19%, and then 81% was not achieved. And same to quarter 3, we achieved 31%, and then 69% was not achieved. And then in quarter 4, we achieved 38% and 62% was not achieved. That is why when you look at all the quarters, then it comes to 21%. Now, here we are getting into the micro indicators. The ones in red are the ones that we did not achieve, and the ones in green are the ones where we've achieved, Chairperson. In terms of the housing units, we were supposed to do 5,000 housing units. We did 2,451. And in terms of the hectares of land, specifically for PHSDA, we did 1,500. We had supposed to do 1,500. We achieved this one by doing 1,765. So this KPI was achieved. The next KPI is the Integrated Implementation Program for PDAs. And this one also was not achieved. We had a target of 47, and then we only achieved 40. The next one on service sites, we were also supposed to achieve 5,598, and then we achieved 2,806. So on the title deeds, we're happy to say that we've achieved on the title deeds. We had a target of 1,456, and then we achieved 1,566. This one is the MTSF targets in Chair. This one is in progress. As you would remember, this takes into consideration the sectoral targets, and then we're also looking at the HDA target and then the progress to date. So in terms of the MTSF sectoral targets, on priority development areas, there were 94 declared, and then HDA took the whole sectoral target of 94, and then we're sitting now at 136 priority human settlements and housing development areas. So this one is going well. The development plans for all 94 priority developed areas categorized and prioritized with budget and finance options. We took the sectoral target of 94, and we're sitting now at 59. On the 100% hectares rezoned acquired in 2014-2019 within PHDAs, we were given the whole sectoral target of 100%, but in terms of that, as HDA progress-wise, we're now sitting at 32%. When you look at the housing units, the sectoral target was 470,000. Of the 470,000, we're sitting at 67,600. I'm sorry, 67,669 is the target for HDA, and we are sitting at 12,779. And then the sectoral target for service sites is 300,000. And then the target for HDA is 51,146. and then we're already sitting at 9,715. If you look at the total number of title deeds registered is 300,000. Our target as HDA is 39,000, and we're sitting at 9,005. Here, Chair, we are looking at granular programs and looking at each one individually to say where we are, what informs administration and all of that. So from that one, the first output, it was the unqualified audit. We were supposed to achieve an unqualified audit. The target was unqualified audit outcome with no material findings. Unfortunately, we received the qualified audit, and then we've got material findings that we're also dealing with. And from a transformation point of view, is the target was to award to businesses owned by BBBE level 1 to 4. And then on this one, the target was 60%, and then we've achieved 70%, Chair. So we've got a positive variance of 10%. And the next one was the businesses owned by women. The target was 35%. Unfortunately, this one we didn't achieve. We're sitting at 8.12% with a negative variance of 26%. And then on the one where business is owned by youth, the target was 15%. Also, this one, unfortunately, we could not achieve it, Chair. We're sitting at 2.92% with a negative variance of 12%. When we look at businesses owned by persons with disabilities, our target was 5% of annual HDA procurement spent, and then unfortunately we achieved 0.53, and we're sitting at negative 4.47. The same goes for military veterans. The target was also 5%. We did not achieve it, Chair. We're sitting at 0.27, and we've got a negative variance of 4.73. On percentage implementation of the approved internal audit plans, we wanted to achieve the 100% implementation of the approved internal audit plans. We could not achieve the 100%. We achieved the 75%. We are left with 25% purely because some of the processes were partially implemented. And the same goes for the percentage implementation of anti-fraud and corruption. It was supposed to be 100% implementation of anti-fraud and corruption plan. We have worked on the plan. As we sit now, Chair, we did not achieve the plan, and we've put it at 0% achievement, and that the 100% is a negative achievement. But what we look at it, you will see, Chair, that the anti-fraud and corruption plan is there. What we need is just the full implementation of the plan. On integrated implementation programs, PDA prepared, we had 47 integrated implementation programs for PDAs that are prepared. Unfortunately, we've achieved 40 of those. So we've got a negative variance of 7. And all of those are mainly due to procurement and budget constraints, as we had said, in terms of the insufficient funds. And the 1,500 hectares of well-located acquired within the PHSDAs. If you look at that one, Chair, we have done well. We've achieved 1,765. If we go to the zoned townships established and all related development, here, Chair, we're still struggling because our target was 30% of the 1,884 hectares, and then we have achieved 0 on that one. Purely, we've put it at 0 because we have achieved some, but not the whole. So because of the delays that we've experienced with the municipal planning tribunals and all the other challenges that we've had in this one. So it's one of those that we are looking at, Chair. On this one, it's a number of hectares of land rezoned for human settlement development. So the target was 1,000 hectares of land rezoned for human settlement development. Of the 1,000 hectares, we achieved 607. So we're sitting with a negative variance of 392. On the next one of the well-located land acquired or released for human settlement development, here the plan was to have 750 hectares of well-located land. We are happy to say, Chair, that we have achieved this one. We have actually done 3,243. On the next one is the adequate housing and improving living conditions in informal settlements. The planned annual target was 375 of informal settlements supported for upgrading to phase 3. Unfortunately, on this one, we achieved 204 informal settlements. So we're sitting with a negative variance of 171. The next one is the number of informal settlements upgraded to phase 3, which we call the end-to-end. On this one, we were supposed to do 4 as the target. I'm happy to announce, Chair, that we've got 5. Same goes for the informal settlements assisted with relocation and emergency intervention. On this one, we had a target of 2, and then on this one, we've achieved 2, so we've got a positive variance of 2. We have achieved 4, sorry, so we've got a positive variance of 2. Thank you. On adequate housing and improved living conditions in selected catalytic mega projects, the 50 catalytic projects, we've achieved that one, Chair. The number of catalytic projects assisted in raising capital for the infrastructure required for the projects. We were supposed to do 6 business cases. On this one, we did not achieve it, Chair. We had challenges with the bankability of most of the projects, but it's something that we're focusing on. And I'm quite comfortable that we will be able to make our plans bankable. And on the one of 23, the number of municipalities provided with technical and implementation support for distressed mining communities. This one, Chair, I'm happy to say we've achieved it, all the 23 municipalities. On program 3, is 780 units that needs to be completed. On this one, the units, some of them are sitting at wall plates, they are not completed. So the whole 780, we took it out, Chair, that it was not achieved. On the region A, this is now where we're dealing with each region. The number of IBT housing units delivered in relation to projects implemented by HDA. The number was 2,787. We have achieved 1,685. So we've got a negative variance of 1,100. And same goes to region B, the number of housing units. We were also supposed to do 1,464 of the housing units delivered. We've done 766, and we've got a negative variance of 697. Chair, on the planned annual targets for the service sites, we had a target of 2,513. On the actual achieved is 2,596. That's for region A. And for region B, we had 1,389. And then unfortunately, we did not achieve it. We're sitting at 210. So there's a negative variance of 1,179. And then on the 500 service sites for region C, they're sitting at 0. All the 500 sites were not done, mainly because of the challenges we were sitting with in terms of the Ppra applications. On this one, Chair, we had a target of 1,554 number of service sites for region B. Also, this was not achieved. Also as a result of encounter with non-responsiveness of the correspondence by relevant municipalities. As we had said, Chair, that we've got the interdependencies with municipalities. We have since written to the chairperson of the Municipal Managers Forum, and they have assured us, Chair, that in the next Municipal Managers Forum, they will allow HDA to come and present there so that we can introduce HDA formally to the municipal managers, and then we can then be able to gain traction in terms of the working relationship with the municipal managers. 40 of the human settlement projects managed by the HDA, we have achieved 53, so we've got a positive variance of 13. On the 100% completion of milestones of all projects managed by the HDA, on this one, we unfortunately didn't achieve it, Chair, and then it's one of those that we're focusing on now. On the planned annual targets for 2021 for Region C, in terms of the 62 human settlement projects managed by the HDA, we've achieved 32, and we've got a negative variance of 31. Same goes for the 100% completion of budget eradication projects implemented by the HDA. This project, you'd remember, Chair, that it was then moved back to the Department of Water and Sanitation. So it's no more sitting with the HDA. 3 projects, strategic projects that are packaged for the development. This one's also is part of the bankability and the delays that we have always been raising in terms of submissions for the water use license and the development planning and the related studies. So this we are also working on because we had targeted 3 key areas as the projects that we'll be focusing on. So the projects will be going ahead with them, but the delays are on the basis of the challenges for WULA. 1,456 title deeds registered. This we have achieved, Chair, at 1,566 title deeds registered. And the final one in terms of the programs is program 4, the planning, monitoring and evaluation and the IGR. Here, Chair, we had 1 target, the 100% spatial transformation planning, analysis and implementation, support provided on projects, programs within 10 working days. This we did not achieve, we achieved 93%, so we're sitting with a negative variance of 7%. Chair, we are now going to get to the audit outcome for 2021-2022. In terms of our audit outcome, Chair, we have received, as I said, a qualified opinion. And in terms of the qualified opinion, there were the issues that were material that were raised. One of those was the project obligations, the issues of project receivables, and the land inventory, property, plant and equipment, and the irregular, fruitless and wasteful expenditure in terms of the supply chain. I will get into the granular detail on the next slide in terms of project obligations and also the challenges that we're sitting with there, Chair. On the predetermined objectives, we had an unmodified opinion, Chair. When we get to the audit action plan, it talks in the main to the main issues that were raised. The first one being the project obligation. It's in terms of the project obligation, the root cause is the no adequate record keeping processes in place. That's the one that we have said that now we've started also, Chair, with the issue of the automation, but the review the invoicing process to the provincial departments, meeting with provincial departments to align GRAP and MSC. Here is because of the accounting standards that we both use are not the same, because you would remember that as HDA, we're using GRAP, but the departments are using modified cash. So because of that, Chair, what we then call obligations, project obligations, differs in terms of what we will then, it falls also on the second one to say, what are the receivables on their side? And then when do we say the project needs to now be recorded as receivables? So we have spoken to the department about that. We've also consulted with the National Treasury in terms of how we can go about it with the DORA. We've agreed that all the projects that are coming to us, they need to be gazetted first, and then they need to also inform National Treasury so that the money is not just transferred to HDA, but there is no work for it. What used to be used colloquially as fiscal dumping, we are trying to avoid that by now saying that before you send the money to HDA, you need to first gazette it and also notify the National Treasury. So the issue of project obligation and project receivables, they will both be covered on that one. And then on the land inventory, one of the challenges that we are sitting with is that we were unable to then do the valuation on an annual basis of the land that we're sitting with. But we have since decided, Chair, that we will then use the municipal valuations because they do a 5-year plan of the valuation, and then in between they do the supplementary valuations. So this matter of the land inventory will also be covered at that. On property, plant and equipment, The issues that were raised there were no audit evidence obtained due to the office relocation, because you would remember in the main, it will talk to our asset register, purely because we were moving to a temporary place, offices chair. We were just given small space, and then we could only put our equipment in one room. And unfortunately, when they did the fiscal verification, they could not verify all of the assets that we have. But we have since moved from that chair. We have done now the fiscal verification. What we are doing is that we are now automating our asset register and making sure that going forward, it will be easy to locate all our assets, including where we've got land. We will be able in our asset register to put the coordinates and make it easier for anybody to see where our land is. And also it will assist in terms of showing the appreciation and depreciation of each and every land and the remaining useful life. So to that extent, we're quite comfortable that the issue of the asset register, we have addressed it adequately. On the irregular expenditure, Chair, the issues of irregular expenditure have been coming. It's a matter that we have been looking at it, and then from our side, we've put the controls. We're working closely with the internal auditors to assist us in making sure that we put controls that can be used, and where there are challenges, we also take the team through the training just to empower them on what needs to be done on issues of supply chain. But also one of the things that we have done, Chair, is that we were able to appoint a senior manager supply chain, and the senior manager will be starting in 2 weeks. And we're hoping that with the experience that she has, she will be able to assist us also in terms of going forward with the supply chain processes. On statement of budget versus actual, Chair, I can only say that on this one, it was just an unfortunate finding. We have worked on it. I can safely say that this one will not be a repeat finding. We have found where the challenge was, and then we have resolved the issues that we had on this one, Chair. Thank you. Chair, what we did is we did the audit action plan, but we looked at 2018, 19, 19, 20, 2021, and 21, 22. Why we look at the new findings, what we wanted to understand is to do almost a 3-year rolling, just for us to understand what were the repeat findings, what caused the repeat findings, which are the new findings, so that we can see if the controls that were put there are working or not working. So in all of this, Chair, we've tabulated where is the repeat findings, and we've also tabulated where the findings are new. And then we are able then in our audit action plan to put a system in terms of these are the controls that are working, these are the controls that are not working. So we've got what we call the Operational Clean Audit Committee. And in terms of that committee, on a Friday, we look at all of them, Chair, and then we say how far are we in terms of the implementation of the audit action plan. So my sense is that by March next year, on the 30th of March, we will have implemented all the audit action plan and then also put in proper controls. As I had said, Chair, that we've also appointed the Chief Audit Executive, who will also be assisting us in terms of putting controls and testing whether our controls are working as envisaged. This is also goes to the same in terms of where the issues are and then what we've looked at. And then we have done all of those, Chair. For example, the issue to conduct business impact analysis, we have come up with a process in terms of how we will do the business impact analysis, because what it wants to do is to make sure that we don't go out and procure services that will not have an impact out there. So we've come up with what we call the infrastructure steps, and then we are implementing them, Chair. Thank you. On the irregular expenditure, Chair, I think this is the slide that is very critical that we discussed, Chair. You would remember that from 2017, 18, 19, 19, 20, and 2021, number of transactions that were declared irregular expenditure were 157. Of those 157, they all came to the value of 129.9 million. Of that 129.9 million, the number of transactions that we have investigated internally to see what the challenges were, why did we have irregular expenditure, and whether there was value for money or whether it was wasteful and fruitless expenditure. We've done 81 so far, and on the 81 that we have done, their value is sitting at 53.4 million. That's 53.4 million is a continuation. We're going to account for the whole 129 million. We will account for it either by saying that there was value for money or where there was a wasteful expenditure, it will also show. But the whole 129 million, by the time we are finalized with all the 157 transactions, we will have accounted for that. So if you look at that percentage-wise, we are sitting now at 52%. There's still other investigations that we are also continuing with. So of those, Chair, we can safely say that this far, 17.4 million is what we can declare as wasteful expenditure. The wasteful expenditure, wasteful and fruitless expenditure would be where there was no financial benefit for the institution. And then of that, Chair, in 2017, 2018, it was 2.8 million, which was one transaction. And then in the one for 2018, 2019 is 14.5 million. And 2019, 17 is that 7.7 thousand. 7,000 and then 21,000. So all in all is 17.4 million. So that 17.4 million, the bigger part of it is the 14.5 million, which was the money that was spent in one municipality in Mpumalanga, Tabachwe municipality. And then there was no agreement signed. And then as a result, the institution didn't get any benefit out of that. So that is what we are focusing on. The executive who took that decision at that time is no more working for HDA, but we've started the process of following the money, and then some of them, Chair, might lead to criminal cases being implemented. So we're finalizing just the investigations. So if you look at all of them, Chair, you will see that 52% of irregular expenditure transactions from 2017 to 2018 financial year has already been completed assessment and investigations. So what needs to be done now is also been tabled to the condonation committee that we have internally in line with the irregular expenditure framework. So the irregular expenditure framework dictates that we must have a condonation committee that sits and recommends to the National Treasury. So we will then be taking that to the National Treasury. And the remaining 2019-2020 investigations are at an advanced stage, and investigations have commenced for 2018-2019 cases also. And then we also have an irregular expenditure register that we have developed. And this helps because then it helps us to focus on the trends also and be able to see where the bottlenecks are and where the gaps are so that we can be able to quickly close that. And then I've spoken to the 17.4, which in the main is the 14.5 million, which is that one of Tabachwe municipality. Chair, in terms of the condonation committee, as I've said, they've set and did the determination in terms of the National Treasury fruitless and wasteful expenditure framework. And then where we are, the matters have been assessed. Most of them, the investigations are finalized. It has to just go to, it has gone to the condonation committee, will now be going to the REMCO and the board. And from there, the stage 4, it's where now, after we've gone to the board, we'll now start the consequence management. But there are others where it was in the audit of the previous audits, as the chair has said, that internal disciplinary processes were underway as two of the executives, their matters have been resolved, so they are no more with HDA. And then the other ones that we have done, you would remember that there was an issue with the Talana TRU matter. So we have also taken that to the database of restricted suppliers with the National Treasury. And then in terms of that, we have made sure that the company itself and the directors of the company are put in the restricted database to make sure that their IDs are restricted from opening new businesses and trading again with government. So to that extent, we know that once they are put on the restriction, they will not be able to trade again. Where there were other issues, Chair, you would remember with Mdanzane, one of the PRTs that was there, we've also taken them for database of restricted suppliers, and the main contractor that was there, we've canceled the contract. We've been having meetings with the SIU, and with the preliminary report that they've given us, it strengthened our case to cancel the contract, so the contract is not going forward. So we're quite comfortable that the issues have been raised and then have been dealt with. However, there are some of the issues that we will still be dealing with based on the board approval for the report from the condonation committee, and then the consequence management will also follow from there. Chair, if you'd allow me, I would ask the CFO to take us through the statement of the financial position, and we will then come back from there. Thank you.
All right. Yeah. Thank you, Chair. Chair, I'll take you through the statement.
Thank you, CEO. We're not doing very well in terms. CFO, if you can move with speed.
Thank you, Chair. Chair, I'll take you through quickly the financial position. Chair, in terms of the assets, the total assets that we had is 2.6 billion, and in the main, it consists of the land parcels that are acquired by the HDA, the 27 million that is there, and also the land inventory that we have represents the land that is held by the HDA on behalf of other provinces or municipalities, and also the cash and cash equivalents that we had at the end of the financial year amounted to 1.9 billion cash, and also part of that it belongs to funds that are held on behalf of the provincial departments that we are implementing their projects. Then, Chair, when we look at the bottom half, then we do have the payables from the exchange. Payables from exchange transactions, which consist of normal creditors that were not paid at financial year end, and also the year-end payables significantly declined compared to the prior year due to the timeous payments of the service providers. Chair, then we also look at the project obligations that we have that represents the funds that were received from the provinces for projects to be implemented by the HDA, and a significant portion of those funds was received during the fourth quarter, and it amounts to 856 million, and this is excluding the value creation projects. And then, Chair, when we look at the cash and cash equivalents details, the HDA, from the grant, we had a surplus of 86 million cash that's remaining at the end of the financial year. And in terms of the projects, we had 1.9 billion that is remaining, and the 60,000 is the cash. And in the main, the the cash that's remaining under Free State, it's mainly due to the additional cash that we received from the Free State for land acquisition. And under the Eastern Cape, it's mainly the unspent funds on that relates to the UISP, and also on the Gauteng, it's a portion of the chemical toilet funds that remained unspent at the financial year end. And under KZN, these the funds were mainly for the implementation of the catalytic projects. And also with Limpopo, yeah, a significant decline there is due to refunds that were made to the Limpopo Coxstar department, as well as Northern Cape. We refunded them the 65 million as requested by the AGSA during the audit, that these funds were received during March, and they requested HDA to pay back that money to the province. And then in terms of Northwest, this is a small funds, because we did not receive funds from Northwest in the previous financial year, but that is the interest that was earned on the funds that we hold on behalf of Northwest. So, and then Chair, we've undergone the process of declaring the surplus, and also the retention of surplus process. And then statement of financial performance. Chair, in the main, if I can just look at the big issues, I think the 235 here, we
CFO, there is a lot of noise behind you.
Yeah, Chair, it seems Miss Lucy's phone is unmuted. Yeah, thank you. Yeah, Chair, the 235 million represents the grant allocation that we have received from the department, and then the provinces have supported us, or they've given us, in terms of the conditional grant, for project obligation, for project operations, the 99 million. Also, the project management fees of 37 million was earned by the HDA due to the implementation of the projects. And then the rest is the interest income and also the rental income that we are generating from the properties that we're renting out. And then in terms of operating expenses, Chair, the increase were due to the travel and accommodation, the legal fees and consultants. And this is due in the main of projects, including catalytic projects and litigations, and as well as the temporary staff. Right. Chair, if I move on to the last slide, comparison of actuals and budget. Chair, we see that there's the major differences comes from where the provinces have gazetted the funds to be paid to HDA, but only 99 million was received during the financial year for project operations. And then in terms of project management fees, we budgeted to earn 69 million, but due to the delays or slow implementation of projects, only 38 million was generated. And then lastly, in terms of the expenditure, Chair, I must say that we are in a process of, especially those items that are increasing at an alarming rate. We are in an exercise to review the cost allocation and to ensure that costs are not paid from, the project costs are not paid from the operational fund. Chair, that is my presentation. Thank you very much.
Chairperson, that will be the submission from the HDA. Thank you.
Thank you very much, Chair. Can we then go to second entity, which is EAAB/Ppra?
Thank you very much.
Can you remove your presentation so that they can flag theirs?
Thank you very much, Chairperson, for the opportunity to come and appear before the Portfolio Committee. My name is Stephen Gubeni. I am the Chairperson of the Ppra.
Can we see the face, Chair?
But you know him.
The rules are changing, Chairperson. You said if you haven't presented before, you want to see the face.
We always want to see you.
Yes, that's true. That's true. That's true. I think I can start with the presentation whilst they are mounting it, because mine really is the introduction to the presentation. The CEO and the CFO will go into the details of the presentation. So the few words that I want to really say to the committee is that since our appointment last year in November the 26th, we have appeared before the Portfolio Committee and we have presented an annual performance plan for the year 2022-2023. And we were appointed at the time when the last financial year was already in progress. And therefore, we are appearing today to present the annual performance and the annual report for the year 2021-2022. With me, Chairperson, will be the CEO and the CFO, and I understood you when you said we're not doing very well on time, so I'm going to try and rush through. The most important thing to highlight during this year is that there was a change, a legislative change in name from the EAAB to the Ppra. The first 10 months of the financial year under review, we operated as EAAB, and the last 2 months we then began to operate as Ppra. That is from February this year. So the reports that we'll be presenting before you will be split into two, really, in terms of the first 10 months and the last 2 months. I must indicate that it has been a concern in the previous financial years that the EAAB does not have the internal audit function. The internal audit function was since appointed, but there was also a concern around the issue of the CFO and the other executive positions that were vacant. Upon assuming our responsibilities, we concluded the strategy, we concluded the APP, and we also looked at the organizational structure, upon which the filling of those vacancies really depends. So what has happened so far, we have submitted the organizational structure to the Minister for review, and the consideration is underway. So until that organizational structure is approved, we will continue to operate on the basis on which we are currently operating, but we believe that we're almost done with the organizational structure. So both the placement and the recruitment of new personnel will depend on the approval of the organizational structure. But from the board's perspective, we have considered everything that we have considered. We're just clarifying the minister on a few issues that she may have as concerns before she can actually approve the structure. Insofar as the EAAB is concerned, the first 10 months that is, I must say that albeit the challenges that we have faced, especially towards the end of the 10 months, we have been able to achieve at least the core programs in terms of performance, and that speaks to the Fidelity Fund, it speaks to education and training, and it speaks to the transformation agenda. We could have done better, but yes, work was indeed done. And this also covers issues of dispute resolutions that we are charged with. So as from the year 2022 February, the Ppra came into existence. And there were fundamental changes introduced by the new legislation that had to be considered. And one of the key changes is that we then had to move from issuing FFCs annually to issuing them once in 3 years. And that has also seen a number of practitioners, property practitioners increasing, because our mandate no longer looks after the estate agents only, but it looks at all the property practitioners within the value chain of selling or renting a property as defined by the legislation. So our numbers, insofar as the registration is concerned, sort of doubled, if you like. The CEO will speak to the actual numbers there. The Transformation Fund was also one of the important changes that was brought about the legislation. And the legislation was quite clear to say that this fund has to be established within 6 months of the operation of the Ppra. That means from February. And indeed, we have currently set up a transformation fund, which gets some allocation from the interest of the Fidelity Fund. And we are also having discussions about where else monies can be secured to advance this important program of transformation. But the fund has been established, and we believe that we'll be able to make impact on what we have to do. We're also expected to establish some kind of a research center in partnership with research institutions, and discussions are well underway. I think we'll be hosting a conference very soon with one of the big research institutions in the country. So since February to date, we have made it our business to try and comply with the requirements that are introduced by the new legislation. I must also touch upon the matter of the forensic report that we reported about last year when we came to the committee, based on the allegations that were submitted to us by the minister, which came originally from the Public Service Commission by a whistleblower, an anonymous whistleblower. We have conducted this forensic investigation, and it has now been concluded. And unfortunately, all the allegations that were raised by the whistleblower were confirmed by the forensic investigations. There are people or members of the staff that were identified as implicated in the forensic report. There is a clear, defined course of action to deal with the situation. But I must indicate that as a result of these forensic investigations and the allegations, amongst others, the CEO was placed on suspension and subsequently charged with certain transgressions flowing out of the forensic report. And she is currently undergoing a disciplinary hearing, which is being handled by the CCMA and is being set down for the end of this month. So we want to believe that CCMA, together with us, will prioritize the conclusion excuse me, of the matter. There are other staff members that are implicated, and because of their line of reporting, The matter is currently being handled by the acting CEO, but those who are supposed to be facing charges, they are facing charges, and all the action that has been recommended, it's what we are currently pursuing as the board. The audit findings for the first 10 months came out as qualified, and so are the audit findings for the last 2 months. The only unqualified audit opinion we have received for the PPRA Fidelity Fund, because we account for those as a separate set of financials. We see this not as a setback because most of the issues that were raised by the AG did not come to us as a surprise. We rather agree with the findings, and in fact, they are consistent with the findings of the forensic investigation. So we take this rather as an opportunity to start building an organization from ground up. And it's an opportunity that we're embracing. Hence, you will see in our presentation, we also have got action plans in terms of what we intend to do to respond to each and every finding that we have received from the AG report. So we believe that we are making progress towards making the institution a better institution. Our relationship with the industry are improving on daily basis. We have open line. We are able to talk to the industry wherever there are issues of possible or potential conflict. We are able to speak to the industry and try and find each other. We want to believe that gone are the days where when we agree on one simple issue, we rush to the courts and nothing gets done until the court matters are finalized. We are trying to resolve our issues on our own and not to speak past each other. So we believe we are on the right track in general in making it a point that the industry is a conducive industry for everyone to operate under, whilst we achieve the most important goals of transformation in the sector. Allow me, Chairperson, without wasting much of your time any further, to request the CEO to come in and give us a detailed presentation. Thank you.
Thank you, Chair. Thank you, members, and good morning. My name is Delin Kambole, and I am the acting CEO of the PPRA. And also, I would just like to say good morning to all the members of Parliament, to also colleagues from other entities. I will then be taking you through the PPRA or EAA. Thank you, Chair. So I think I'll just pass some of the slides because the chairperson has gone through them. And this is just an overview which speaks to what the chair has said in relation to us changing from one entity to another. And I think what I'll touch there is that there was a concern that was raised by the auditors in the past financial year where there was lack of internal audit. However, we can confirm that we now have internal audit, and the Audit Risk Committee has reported their satisfaction with progress in relation to the internal audit plan that has been made. In terms of the core programs of the EAAB, we have the Fidelity Fund, we've got education and training, we have transformation, and we also have, we've got transformation. And in terms of the achievement, we can then say under the Fidelity Fund, we achieved 100%, 67% for education and training, and then 43% for transformation. What also was notable is that despite the economic trend down, we did see that estate agents continue to renew their licenses. As a result of this, for the 10 months, we were able to issue about 53,739 FFCs as compared to the previous year where we issued 51,063. Our transformation initiatives that are aimed at assisting previously disadvantaged individuals, we also saw a slight improvement in that we assisted over 308 applicants, and there was an increase when you compared to the previous year where we only had about 251 applicants. And then also, Chair, I think we are then, in terms of professionalizing the industry under the year in review, we had a total number of 1,775 estate agents that were exempted or from completing the SITA qualification. And if you compare this to the previous year, we had about 1,101. And then in terms of PDE that was conducted, we had a total of 1,321 estate agents that were awarded, and we then are saying this was a significant increase. In fact, it was a historical achievement when you compare that it was for a period of 10 months. And further to that, we had a total number of 16,027 candidates that completed the CPD program, and this number was doubled when you compare to the previous year where we had 8,667. One of our core mandates, Chair, also is that of resolving disputes between consumers. And under the 10 months, we were able to resolve about 2,453 complaints out of a total of 2,863 that we had received. And then we are also responsible for ensuring compliance within the industries. You are not able to see the new slide, Chair?
It's a table of content. We are still on the table of content.
And then now, Chair? Sorry.
No, we can't see. Still say in. And members, do you have in your gadgets? Do you have the presentation? Because with me is the table of content.
Still not moving, Chair. Is it still not moving, Chair?
Yeah.
I'm not sure what's happening.
It's not moving. It has started to move now.
It started to move.
Moving. Yeah.
Okay. Okay, let me see if I can continue. Can I continue like that? Is it moving now, Chair?
Yes, yes.
Okay, no, I'll keep it like this, sorry, so that at least I can then move. I'm so sorry about that. So I think
sorry, can you put it on a slideshow so that we can see it nicely?
Yeah, I think that's where it was giving me problems. Is it moving now? Chair, is it moving?
It's not.
Yeah, Chair, can I keep it here? I think there's something wrong when I put it. Now it's moving. Yeah, when I put it on this mode, it moves, but when I put it on the other mode, it doesn't move. I'm not sure why.
Okay, proceed.
Yeah, I'm so sorry, Chair. Okay, then in terms of the I think, Chair, I was on the next slide. So I think the key strategic objectives of the PPRA, now I'm presenting under the overview of the PPRA, Chair. So the PPRA came into being in February, so we'll be reporting for 2 months, and its strategic objective is similar to that of the EAB, which is the protection of the consumer as well as issuing fidelity fund certificate, and also providing standards of training. And then when the PPRA, it moved from issuing an annual FFC to issuing a 3-year FFC, and under the 2 months chair, we were then able to issue a number of 6,016 FFCs. And then in terms of the educational requirements also, Chair, during the year review, we had a total of 575 property practitioners that then wrote the PDE exam. And out of that, only 495 we can confirm that passed. In terms of the investigations that we conduct, Chair, we conducted or finalized 262 investigations within the 2 months period. That is the consumers that we assist in dispute resolution. And then moving on to inspections, we did 20 inspections under the 2 months. And the reason for that, I mean, we said to do 20 inspections, Chair, apologies, but we were unable to even conduct the 20 inspections because under the PPRA, we had to come up with inspection guidelines that had to be developed so that we could do the inspections. And these were not fully developed within the year, so we didn't achieve. And then during the 2 months ending 31st March 2022, a total of 241 audit reports were received. These audits from the trust accounts. So this is the number that was received. And then also, Chair, we have a clause, which is section 4 of the Act that has been created, and it gives a right to any person to apply for exemption from any provisions of the Act. And we received about 318 applications for exemptions. We were then only able to exempt 208 applicants. And when the year ended, we were left with about 110. These required that the applicants comply, Chair. And then in terms of our transformation initiatives, Chair, we are empowered to assist Black women and disabled individually. We are supposed to support them financially through our transformation fund, and under the year in review, 29 Black women were supported to move to principal status. And we had about 137 learners that we placed with host employers. This is in terms of the youth program that we are running together with the SITA. And then, Chair, I will just go straight to going through the performance of the EAAB, which I will start with. In terms of the targets, we had 21 targets and we only achieved 7. And in total, that translates, Chair, to an achievement of 33%. Then in terms of the programs that led to that performance, Chair, we've got finance and administration, where we had 5 targets, but we only achieved 1. And under compliance, we had 4 targets, but we're not able to achieve any. When it comes to your education and training, Chair, there we managed to do 2 out of the 3 targets. And then with respect to transformation, Chair, out of the 7 targets we managed to do or achieve 3 of those targets. And then in respect to the Fidelity Fund, we're able to completely achieve that. We also, Chair, as you know, as a government entity, we have the MTSF targets. We were not able to achieve those targets, Chair. And then just going straight into looking at the specific programs and what were the specific targets and the variance in respect to those targets. So we had hoped, Chair, to get targeting to get an unqualified audit opinion with no material findings, but unfortunately we got a qualified audit opinion with material findings. And I think the reason for the finding was the inability of the entity to separately keep records of exchange and non-exchange transactions. We were also targeting, Chair, to implement 100% of the fraud prevention plan. That was also not achieved. And the reason was that by the time we ended or closed financial year, we had not developed the fraud prevention plan. Moving on, Chair, and then in terms of the target of 100% compliance to statutory tabling and prescripts. We were able to achieve this, Chair, and we can confirm that the target was achieved 100%. And then also one of the targets that we have is 100% implementation of management action plan that are intended to address our audit findings. These were partly implemented, Chair. As a result, we only achieved 64%, and we can confirm that some progress has been made in trying to ensure that we achieve 100% of implementation towards the plan. Some of the challenges that we encountered, we've been able to overcome them so that we are able to implement the audit action plans. And then we also targeted, Chairs, you know, we're responsible for registering estate agents and issuing them with Fidelity Fund certificate. We targeted at 100% registration within 21 days. We fall short, Chair, of 1.13%. We're only able to achieve 98.87%. And some of the challenges that resulted in that was just the IT challenges that we are facing, requiring us to have manual intervention, and then slowed the progress, or it slowed the progress of our registration, resulting in us underachieving by 1.13%. Also, with respect to renewals, which we were targeting at 80%, we are supposed to have been renewing or issuing renewal certificates within 5 days. We achieved 78%. Chair, it's also in relation to the IT challenges which required a manual intervention at some point in time. But we are working on our IT challenges to ensure that we have a seamless process that is fully automated and we can effectively and efficiently register estate agents. Then, Chair, also we are responsible for disciplining estate property practitioners, and then we are supposed to, after disciplining them, enforce those hearing outcomes, and we are targeted at 100% enforcement, but we were not able to achieve that, Chair. And the reason was that our disciplinary hearings, which is hearings that are done in terms of the legislation, require that we have experts within the field, and they are appointed through contracts. Those contracts had expired and they were not renewed, so we did not have members or disciplinary committee members that could do that. We are also responsible, Chair, for enforcing or under the FIC, we're also responsible for one of the mandates under the FIC because we're a supervisory body, and we do inspections. We are targeted at having 190 FIC inspections. We could only, Chair, achieve 150, so we fell just 40 below target, Chair. And the target of 190 inspections is supposed to be over 12 months, but we know, Chair, as we are reporting, we're only reporting for a period of 10 months. And then the other, remaining ones, we try to do them under the Ppra, which I will also elaborate, Chair. And then moving on, Chair, in relation to increasing our database or increasing our registered estate agents with professional designation, we had targeted at a 14% increase baseline. We were able to significantly achieve that, Chair. And then also we targeted at 9% increase of baseline of retention of estate agents that have enrolled for what we call the PDE4. Chair, we can confirm that we achieved that. Moving on, Chair, in relation to another target that we're supposed to achieve, sorry, we're supposed to increase by 90% the number of estate agents that we have registered with us for CPD or who meet CPD requirements in full. We were only able to achieve 60%. And the issue that we had, Chair, was that we had to move from doing venue-based CPDs to then having it on the portal, and we then encountered a number of technical challenges with our learning when we moved to offering CPD in that format, Chair. Then in terms of the transformation programs, Chair, we were supposed to collaborate with DHS and develop a strategy to transform the property sector, where we then had to target 2,010 estate agents under the One Learner Estate Agency program. But however, we couldn't do anything, Chair, because there was a delay in the funding from SITA. Prior to the PPRA, we did not have the transformation fund. Our transformation programs were solely funded by SITA, hence the non-achievement. Also in relation to those 10 estate agents or one learners that were supposed to place, we were then supposed to retain or we were targeting at a retention of 70% of those learners, but also we fell below targets due to the funding from SITA. And then, Chair, also in relation to transformation, we have a target of 30% increase of full status Black women that we support through a program called Principalization. Chair, also this one, we fell below target. I think we were only able to achieve 58% of that program. And then in relation to, Chair, also one of our program, which is called the Principalization Program, we assist estate agents into becoming principals. We had targeted to have 280 principals, but we can confirm, Chair, that in terms of assisting these from moving to one status to the next, we achieved and we were able to move 1,094 people to the principal status. And Chair, one of our target also was to establish the Property Practitioners Regulatory Authority, and we were able to achieve the PPRA within the time period, and that was achieved. In terms of the MTSF programs that we have, what we were supposed to do was an implementation of the Borrower and Homeowners Association, Home Ownership and Tenant Education Program, where we're supposed to partner with DHS and other entities. We did fall short of this. There was some awareness that was raised, but there was no traction with respect to the DHS entities and implement these programs. And I think the reason was caused solely by the fact that there was no clear, defining the responsibilities or the shared responsibilities between the entities. But I think now, Chair, we have signed an MOU which clearly defines roles for each of these entities, and we are then going to see traction going forward. I think, Chair, I'm going to jump from this one, Chair. It's just a summary of what I have tried to explain in the slides regarding the achievement of the programs that we have. I will move over, Chair, to then present the annual performance of the PPRA, which is for 2 months, and we had targeted, or we had 13 targets, and we only achieved two, Chair. So I'll just go into detail with the programs. We obviously still had the finance and administration, and we did not achieve under that. Under the compliance program, we had a number of 4 targets. We could only achieve 1. Within the education and training also, Chair, we were not able to achieve. And sorry about that. And in relation to transformation, we can confirm that we achieved the target. Then just in trying to explain this targets and in detail. So under finance and administration, what we were supposed to have done was to have an approved PPRA HR annual plan, and this was not achieved. It was not developed, but we can confirm that we are progressing, and we will be able to meet this target in the next financial quarter. I think the 2 months period did not give us time within which to fully develop this plan. And then also our other target is the approval of the Ppra stakeholder management plan. This was also not achieved, Chair, and we are also in the process of implementing, after the plan, we will be implementing it going forward, Chair. Then moving on, Chair, we are supposed to have collected 100% of all the fees that are allowed by the Act to be collected by us. We were not able to achieve this target. This is a new indicator, Chair. And what we have then done is that we have, in terms of the new structure, dedicated a collections manager who will then be responsible solely for ensuring that this function is fulfilled, or this program is fulfilled. And in terms of procurement, Chair, 40% of Ppra procurement is supposed to be spent on businesses that are owned by designated groups. We could only achieve 24% of that program, Chair. We fell short of 16%. This is also a new target, but Chair, the previous focus has been on entities owned by larger HDI, but now we have shifted the focus, Chair. So confident that moving forward with all these new targets, Chair, we will be able to achieve going forward. And then, Chair, I did explain this one in relation to the disciplinary hearings under the 2 months period. We still had no committee in place. So this was not achieved, and we could not then hold the disciplinary hearings and in fact enforce any of the outcomes that would have come out of the disciplinary hearings. We also targeted, Chair, with the 2 months, we wanted to register on our database 9,000 property practitioners. We could not reach that 9,000 targets. We could only register 1,220, so we fall short of that. And one of the main issues, Chair, is because of our IT system readiness. It did hinder us from processing all of these new property practitioners that were supposed to be registering. And then, Chair, also in relation to our CPD, we had planned a 5% increase in the registration of all CPD property practitioners. And we obviously, Chair, could not meet this as well. And this was also due to the technical issues that we had with our e-learning. And then, Chair, for skills development, we had to have a plan that was approved. This target was not achieved, but significant progress has been made. This is also a new target, Chair. So as we transition from the AB to the Ppra, we have made progress in coming up with most of the plans that we're supposed to develop and have them approved. And then, Chair, also in relation to, I'm moving on to education, Chair. I don't know if I've skipped one. Yes, in relation to education, one of the introductions of the new act is the development and establishment of the Property Research Center. In terms of this, we were supposed to then enter into MOUs with several institutions, including NRF. We were not able to finalize that within the 2 months. I think the engagements between us and NRF took quite a long time, to the extent that we did not eventually sign this. But however, Chair, we can confirm that these MOUs have been drafted and we are in the process of signing them. And then with regard to the One Learner program, Chair, even under the PA, we were supposed to or had targeted at 70% retention, but we could not also achieve this. And the delay was caused by the fact that the non-achievement was caused by the fact that there was a delay in the SITA funding, Chair. So in relation to transformation, we were supposed to assist about 50 Black women that would have achieved the status of principalization or principals, as we call them. We've been able to support 79, and so we did achieve on this, Chairperson. And then, Chair, this is in relation to just a summary of what I have presented of the programs that we have and how we went about in relation to the achievement. Then I'm going to move, Chair, to the audit outcomes. Obviously, Chair, our chairperson did say that we had I think our performance was not that great. And then in terms of the EAP, the audit outcome was qualified with findings that is in respect both of the PPRA and the EAP. And then when it comes to the PPRA Fidelity Fund, we had an unqualified audit opinion. And some of the findings from the audit as well as the action plans, Chair, is that there was a misstatement in the completeness of receivables. And our action plan is then we are planning to clean up our data, as well as have a split of the control accounts for the receivables. We are also targeting at updating our policy under the receivables so that we can be able to write off the debtors. Our SEP system, we are on a project to update our SEP system so that it has a back end that will affect a debtor's write-off. We are also looking at automating our billing system so that we are able to impose penalties. Then in terms of revenue, from non-exchange transactions, the finding was that there was an overstatement of prior year adjustment journals that was processed. So also in relation to the action plan, it goes back to our system. We want to upgrade our subsystem so that we can, enhance the revenue controls. The billing module within our subsystem will also be configured so that our billing will be restricted only to those registered estate agents or those estate agents that are eligible to be registered by the PPRA. And then there was a finding in relation to SCM, which touches on procurement and contract management. And Chair, I think the action plan there, we are going to enforce internal controls so that we ensure compliance with policies within the SCM function. What we also need to do is that with the SCM needs to be capacitated with employees that are better skilled. That is one of the reasons that led to employees not even being able to manage the contracts. And as a result, we were using contracts that had expired. Another finding was the non-approval operating expenses. And here, Chair, we are saying that we are going to intensify the financial controls, and where applicable, we will implement consequence management for those employees that have been implicated, Chair. Also, there was a finding that our policies under the current year in review were not reviewed. So what we have done is that we have reviewed these policies, and we have now placed them before the relevant committees for their review and approval, and these will then be placed, for their review, and then these will then be placed before the board for approval. Also, Chair, in relation to the recruitment process that we have as an entity, it was not complied with. That was one of the findings. So what we are saying in relation to the action plan is that we will enforce HR policies for recruitment and ensure that there is full compliance. And also, Chair, I can say that this was a deliberate ignorance by some members of our team. And what we are then going to do is we are going to implement consequence management as a result of this deliberate ignorance. And then we had a finding from deviation from pension fund. In this respect, Chair, there are employees that were not contributing to the pension fund. And obviously, Chair, this is also as a result of management not taking the relevant action or not deducting from this particular employees, despite the trustees having given the relevant advice that these employees not to contribute. But what we have done in the meantime, Chair, is that these employees have now obviously are now contributing to the pension fund, and any outstanding amounts that were due are now being collected. And the reason why we are collecting them is that the employees were warned of the transgression of the policy in relation to pension fund payment, but together with some members of management, they proceeded to then instruct HR not to do the deductions. So this is being taken care of, Chair. And then when it comes to receivables, Chair, there was also a finding that effective and appropriate steps were not taken to collect the revenue that is due to us. So, Chair, this is also caused by the fact that we did not have a debtors division that would be responsible for collection. And under the new organizational plan, we have then incorporated this division, and we are going to then capacitate it once we have received the approval from the minister. And then in terms of investment, the entity had opened a bank account that was not approved by National Treasury. This has been rectified, and all our accounts, Chair, are now in line with National Treasury regulation. There was also fruitless and wasteful expenditure, especially when it comes to payment of legal fees. And action and Chair, we obviously tried to resolve it before the audit. However, it was still a finding. So we can confirm that it was resolved, and also we are continuing with investigations in line with the National Treasury to ensure that all this fruitless and wasteful expenditure do not occur, or it doesn't become a repeated finding. There was also no assessment that was conducted on the status of pending legal cases. The finding of Chair was resolved before the audit, but obviously, because it happened during that year, it resulted in a finding, but we can confirm that it was resolved. And then there was a difference noted between the APR and listings, or the register submitted to the audit, submitted for audit, and this has also been corrected during the audit, Chair, and we can confirm that under the proposed organizational structure, we now have a position of a manager who will be looking closely at this. And once we have had the approval for the structure, we will capacitate, Chair. I think, Chair, lastly, these were in relation to our ICT department. One of the findings was that we did not have a strategic plan in place. And I'm currently in the process of finalizing this plan, Chair, which will then be submitted to the steering committee for consideration. We also had skills gaps within the IT. So there was an ICT skills gaps analysis that was not performed during the period under audit. And what we have then done is that there is training and development that is in progress, and it will be finalized by the end of November so that we can close on this skills gap analysis. We also had key vacant positions within the ICT. One of it is the absence of the CIO, and also this will be rectified when we capacitate under the new organizational structure. It's just waiting approval of the structure by the minister. And then the IT steering committee meetings were not held, and there were no terms of reference that were in place. So the action plan says that the IT steering committee members have already been proposed by the manager, and terms of reference will then be finalized, and we are projecting to finish this by the end of November. There was also lack of review of ITC procedures. We've then updated the ICT policies and procedures, and these have been placed before the ICT committee. They will soon be ready for submission before the board for approval. Also, in respect to ICT, there was a lack of user access management and also security management. So what we did in order to deal with this finding, Chair, we hired a specialist that came and looked at our entire ICT. They have come up with the report and also made recommendations, and we are now as the PPRA implementing those recommendations that have been made. And then operating expenses, there was payment of airtime for data that was not approved by the relevant officials. This has also been subjected to forensic investigation. The results of the forensic investigator are out as the entity we are implementing these, and the employees that have been implicated, Chair, will then be subjected to consequence management. Also within procurement, there was an issue of study guides that were procured, however, they were paid for but not received. This has also been subjected to forensic investigation. The report of the forensic investigators is being implemented, and we can confirm that the employees that have been implicated are currently under suspension and disciplinary action, Chair. Thank you, Chair. I think in terms of my submission, I am done. I will just hand over quickly to the CFO, who will then take us through the financial report. Over to you, Mr. Napo. Thank you.
Thank you very much, CEO, and good morning to you, Chairperson, members of Parliament, CEOs who are there, and other colleagues from other entities. The financial report, as mentioned earlier, it's split between the two periods in the financial year. The first 10 months would be reporting on the EAAB performance, and the last 2 months of the financial year would be on the PPRA due to the change in legislation that happened during the course of this financial year. Starting with the 10 months under the PPRA, summary financial performance outlook is that on revenue, for the 10 months, we performed well compared to what was the target. We managed to achieve 172 million against the target of 167 million. And this was a good performance in revenue amid the COVID outbreak, and knowing that in some periods of this financial year, the country was under lockdown. But however, the outlook came out okay. However, within the revenue mix, there were some revenue streams that were performed well, while some were below target. One example is that in the education department or sector, due to the COVID outbreak, we managed to achieve less candidates to register for exams and CPDs, and those revenue streams were affected. But however, there were some revenue streams where performance was above target, like the introduction of penalty revenues for delayed payment of FFC fees by estate agents. But that within the entire revenue mix, the performance was 5.1 million above budget for the 10 months. And now moving over to operating expenses. Our total expenses was 148 million for the 10 months versus our target for 152 million, resulting in a 4 million savings, which is mainly attributable to the operating HR structure. We managed a flat structure during the first 10 months of the financial year, where some vacant positions in the structure were not filled, and that resulted in this underlying savings of 4 million. All in all, we managed a surplus for the 10 months of 24 million against the budget of 15 million, which shows a positive performance of 9 million compared to target. Now, looking at the financial position, summary of the balance sheet. In terms of our non-current assets, can you go back to the previous slide, please? In terms of the non-current assets, we're above target mainly because of the revaluation on the land and buildings that was done, which resulted in an upward valuation of buildings by 28 million. But in other areas like investments, there's a shortfall there, mainly because of the poor performance on the investment returns as a result of the COVID outbreak and other market factors by then. Working capital looked good. all resulting in the net asset position of 775 million, which outperformed the target of 755 million. But in terms of the cash flow performance for the first 10 months, the revenue that we generated was able to cover operating costs and generate a cash flow positive outcome from normal operations of 18.5 million. Next slide, Chair. The next slide gives an overall financial performance analysis or outlook of the first 10 months of the financial year. And in terms of our financial performance, EAB managed to generate a net margin or a profitability of 14%, which outperformed the budget of 9%, which looks fairly good. And from a sustainability point of view, the balance sheet resulted in a positive current ratio of 1.4, meaning that the short-term assets that were there were able to cover the short-term liabilities and giving a positive working capital outlook. And also from a financial risk perspective, the solvency is down at 12%, which gives a positive outlook of the going concern prospects of the EAB, which later transformed into PPRA. Next slide, please. Then the next slide covers the financial picture for the PPRA, which was only for the 2 months of the financial year. And in the 2 months of the financial year, PPRA managed to generate revenue of 25.7 million, which was below the target of 33.5 million anyway, showing a deficit of 7.8 million. And also on the side of operating expenses, costs were up at 40 million against target of 30 million. But however, included in this 39.9 million of the costs are the once-off year-end adjustments in terms of the provisions that were raised for non-recoverability of debts or debtors of 10 million, which mainly contributed to the operating expenses exceeding budget. And from the financial position outlook, as mentioned earlier, non-current assets are still higher than budget as a result of the revaluation of buildings. Same as the investments on the PP Fidelity Fund investments due to the poor performance somehow in the general equity and money markets. And working capital outlook was positive at 10 million. And all in all, giving a net asset position of 761 million, which looks favorable to the budget of 760 million, but mainly due to the revaluation of buildings. And from a cash flow perspective, for the 2 months, PPRA managed to generate a 2.4 million positive cash flow out of normal operations. Next slide, please. Next slide, please. The next slide just gives a summary performance outlook of the PPRA. And as mentioned earlier, because of the once-off expenses that were passed as a result of year-end adjustments, the underperformance of revenue for the last 2 months of the year, the net margin outlook was not favorable. It ended at a negative 55%. But however, from the balance sheet performance perspective, working capital current ratio is still favors us at 1.4 ratio. And also from a going concern perspective, the going concern outlook was still well with a solvency ratio of only 13% in overall. That's it regarding the financial performance. May I request that we proceed to the next slide, which is the summary slide for the irregular expenditure for 2021-22. In terms of the irregular expenditure that was reported in 21-22 financial year, the total irregular expenditure for the year was identified at 4.9 million. But in the main was irregular expenditure coming from expired contracts, which were still deriving services from, regardless of those contracts being expired and tenders not put in place to renew contracts for those services. And the main culprit here was the Bytes call center contract, on which we incurred 2.3 million costs for the year out of that expired contracts. And the others which were not so significant below that. But the last two items reported in this irregular contract, irregular expenditure register, were irregular expenses incurred as a result of irregular appointment of service providers. One is on the pension fund mainly, the pension fund was mainly due to the delayed payment of the pension contributions that related to 5 employees who, due to poor management decisions, were excluded from participating or enrolling in the pension fund, despite the HR policy recommending that every employee must be a member of the pension fund. So these 5 employees were not members of the pension fund, and they only became members of the pension fund more than a year later after they were employed. And because the contributions to the pension fund were delayed, there was an interest penalty of 300,000 that was factored in there, and this was disclosed as irregular expenditure. And lastly, the rural brands contract. Here, the service provider was appointed outside the rules of the supply chain management. And as a result of the nature of the appointment, the expense incurred of 1 million was also classified as irregular. All in all, giving rise to the 4.95 million irregular expenditure reported in the under the 2021-22 financial year. And that is all from my side, Chair, and may I kindly hand over to you, Chair. Thanks.
Thank you very much, Acting CFO. Can we get the last entity, which is Csos, Chair and the CEO?
Good morning, Chairperson. Members of Parliament, Minister of Human Settlements in her absence, Acting DG, Human Settlements Executive Team, colleagues from our sister entities, and my colleagues that I will be presenting with, the Chief Ombud, Advocate Boyce Mkhize, and our CFO, Ms. Thembelihle Mbatha. My name is Pindile Mthethwa, Chairperson of the Community Scheme Ombud Service. And now that you've seen my face, I will stop the video and focus on the presentation, if you allow me, Chair.
Yes, ma'am.
My role essentially today is just to give an overview of our performance in the year 2021 and 2022. And as you may very well know, we came to the helm in January 2022. And like my colleagues in the other entities, only had 3 months, the last quarter, to help with the performance of our organization. So our board was constituted then, and we've had 1 resignation since, which we are busy working with the Department of Human Settlements to replace. And as we came into this role as the board, we had to hit the ground running and had to ensure that we put in place all the governance structures to ensure that we perform to the best of our ability. And we worked on the foundation that had been laid by the previous board in ensuring that we meet the performance targets that were already set. So the organization has done very well in terms of achieving the set annual performance targets and has registered an 82% performance, which improves on last year's 60% by 22%. And this has been helped primarily by the reconstitution of the previously non-functional committees like the Social and Ethics Committees, as well as the governance policies. And the good performance has further been fueled by the fact that the organization was finding itself, it had just employed the CFO in August, it had just employed the CEO in April of 2021 and was finding its stability. So there were certain pain points, one of which was the schemes registration within Csos. We have now acquired a full list of all the community schemes in South Africa, and the board has approved a process to analyze and verify and cleanse the data of all these schemes so that we identify the schemes that are not registered with Csos and we're able to then enforce compliance. Also, this will help us in ensuring that we comply with the Schemes Act, which requires us to register all the schemes, and it will also enhance our revenue collection. We're also talking to the Department of Human Settlements for the alignment of our Act, the Csos Act, as well as the Sectional Titles Act, to ensure that we also are compliant and that we enhance our mandate, our regulatory powers, and our efficiencies. So the department is working on this as we have made our submissions to them, and we await their feedback. To also enhance our performance, we have approved the acquisition of the business automation solution system, which has started to operate. We have codenamed this system as Csos Connect, which will help us to fully digitize the Csos environment and business platforms. It will also help us in transacting with our customers. It is web-based. It will also ensure that our administration is on par and that our staff are able to work much more efficiently and carry out their mandate. Another pain point for Csos was the issue of dispute resolution. We had a backlog that was going back years. And in the year 2021, 2022, we managed to clear the historical backlog. The regions are ensuring that there are tight controls on turnaround times in ensuring that disputes are resolved at least within the 90 days, the required 90 days, and even better. So there has been an enormous improvement in that space, and that has actually assisted greatly in ensuring that we get the 82% performance as mentioned earlier. And the changes in our accounting policy to GREP significantly helped us in moving from a qualified audit opinion to an unqualified with some findings due to some irregular expenditure, some of which was still awaiting condemnation from the National Treasury. And we are grateful for all the effort that has been put by our staff members and our team in ensuring that we move from this qualified audit to an unqualified audit opinion. We are also grateful to the Minister for approving our organizational structure, which was designed or is designed to enhance our operational efficiencies and in ensuring that we deliver the strategy as contained in our strategic framework. And this structure is going to allow us to resource the organization and ensure that we reduce our capacity challenges that have caused the high vacancy rate. So at the moment, we are busy implementing that structure, and we are confident that once we are properly resourced, we'll be able to deliver even better results for the coming year. And the undertaking by the team is that by the end of the MTSF, we will be able to deliver a clean audit for the organization. I think I end there, and I will hand over to our Chief Ombud to talk to the operations of the entity. And after that, we'll have our CFO talk to the finances of the entity. Thank you, Chair.
Thank you very much, Chairperson. Honorable Chair. I'm trying just to deal with technology here. Not sure if my face does show, but that's me, Boyce Mkize. I'm the Chief Ombud at the Csos. I have had the pleasure of interacting with the Portfolio Committee before, and so I'm sure that the members would be familiar with this face. I will go back to the presentation just in a little while, as soon as this thing allows me to do so. And just thank the chairperson for the high-level summary that she's shared with us. Oh yeah, I think I'm back there. In terms of the organizational performance, there's one area that I thought perhaps I would also touch on, which had been identified by the previous board in liaison with the committee about enhancement of the public profile of the Csos. We can report, Chair, that we've seen significant strides in this area with regards to the enhancement of the public profile of the Csos. It having appeared on a number of, public platforms, such as your national television and media, print, digital, and electronic. And this has indeed increased the footprint in terms of the Csos availability. And we are moving much more progressively to making it a household brand so that every scheme in South Africa is fully conscious of the existence of this regulatory body. So there are very positive strides in this regard, and it seems things are shaping up well. Honorable Chair, I intend to save the committee time by not focusing mainly on the areas of achievement, but because those are really self-explanatory and they are covered already in the presentation, which I believe should already be in your possession, Honorable Chair and members. So I will touch briefly on the areas where we were not able to achieve the set targets. As you would see there on that slide, Honorable Chair and members, the Program 1 achieved a 90% performance against its targets, and Program 2 achieved 67%. That was the weakest link in the chain, and I'll explain this in a little while as to why we got to that particular point. And Program 3 was at 83% in terms of performance. I must indicate, Honorable Chair, that the rest of the targets were met, save those. In relation to the administration Program 1, the only one target that was not achieved was the target relating to the implementation of the audit remedial plan. And the reason why this is so is simply because, Chair and members, these actions were actionable at year end, and this would have been post the end of the quarter, and therefore post to the end of the financial year. And therefore, we couldn't account for these in the previous financial year. or rather in the financial year under consideration because they were only to be implemented with the audit and as we presented these issues. So we didn't want to grant ourselves any marks and recognition on the issues that were yet to be tested by the Auditor General. And that's the only reason why we couldn't get to that particular target. But everything was on course, Honorable Chair, and we were swiftly moving towards the achievement of these things. And the audit outcomes, in fact, attest to the studious efforts that have been put in this regard by our finance team and our executives in making sure that we achieve these targets. So that's the reason really why we couldn't achieve on that. The rest of the areas seem to be green because we did fairly well there in terms of meeting the targets as was set. The area under program 2, where we suffered a bit of a dip, was in relation to the issue of conciliation of disputes as well as adjudication of disputes. We did have a target of 85% of disputes being conciliated within a period of 90 days, managed only to achieve 73% as opposed to 85%. The same thing with the adjudication of disputes. We had targeted to achieve 85% of disputes being conciliated within a 90-day period, but only could achieve 28%. Now, the reason for these figures and non-achievements, Honorable Chair and Honorable Members, was that we had to focus our capacity into the elimination and eradication of the backlog that had accumulated over the years. And because of that, the matters that in fact were coming through at the time did receive some attention, but not 100% attention, given the fact that we had said to our adjudicators, prioritize old matters, and we would actually get then back to dealing with the issues of the new matters that are coming on stream. I can report, Honorable Chair, that we have in fact moved quite swiftly in not only eradicating that historical backlog, but also we have in fact now gotten on top of the issues pertaining to the current disputes, where we are adjudicating some of them and finalizing them even far much lesser than the 90-day period. So the figures, I think, are going to tell a different story in this new financial year that we are in relation to how we're performing on the conciliations as well as the adjudications within the 90-day period. There is some significant improvement that has been registered in this regard. So that's the only area, and we're beginning to receive quite a number of positive accolades from the irate members with regards to the responsiveness of the Csos in relation to clearing out their disputes, providing real-time information in terms of where their disputes are. And we are beginning to see fruits of that happening. The last area where we did not achieve, Honorable Chair and members, had to do with the, excuse me, please pardon me, I'm not feeling too well with regards to the flu. So my voice is not too great. The area related to the historically disadvantaged executive managing agents, and the target here was to actually at least have 2 of the executive managing agents being placed. No, in fact, it was 80% of community schemes requests for executive managing agents awarded to previously disadvantaged individuals. Now, this is a sore point in the sense that we are dealing literally with a practically and historically, market that is tilted towards a particular racial grouping. And as a result, you are actually not able to see the demographic reflection of the managing agents that would reflect the demography of the country. So a result of which we have instituted a program which is almost akin to that of the EAAB Ppra around the Transformation Fund, where we are seeking to support the historically disadvantaged managing agents who need support in terms of funding, in terms of setting up infrastructure, in terms of incubation, in terms of back office support, and just general twinning arrangements. And to this end, we have already entered and signed MOUs with some of the established executive managing agents, such as Preto, Mid-City, as well as Trafalgar. These have committed themselves to actually providing support to the emerging and accredited, Csos accredited managing agents that basically are drawn from historically disadvantaged communities. We've already started seeing requests that come through from the schemes, because historically the argument was that they do not have a base from which to select managing agents that could be drawn from historically disadvantaged. And this was typically the response from the industry, not surprising, because, generally this has been arguments that are advanced whenever people want to put a shield against transformation. But we are, in fact, in a position now where we have eliminated that as a defense or as an argument, because there is a panel and we are beginning to see requests coming through in this regard. So we couldn't achieve it simply because the market has pretty much been closed, and there hasn't been anything that, in fact, forces anyone to actually go and engage. These are private schemes in the main, and they generally operate in terms of their own private arrangements, and there is no regulatory arrangement that forces them to actually engage entities from historically disadvantaged communities. So this is part of the gaps that we're seeing also even in terms of our framework. And so that was the last one that we couldn't achieve. But generally, Honorable Chair, the performance has been quite okay at entity level. And I can also report gladly that for the past 3 years, including this very year under consideration, we have received a clean audit in relation to performance information, which simply means that our performance information has been impeccable in terms of not only providing accurate reporting against the targets, but also providing auditable portfolio of evidence to support the technical indicator descriptors as set out in the annual performance plan metrics. So we're very happy that that also has come through once again this year as a clean audit. With your leave, Chair, I now wish to request my CFO to take the committee through the high-level AG audit outcomes and the areas of improvement that we have committed as an organization to follow through in order to get us to a stage where we can report a clean audit to the committee. Ms. Thembeli Hlambata would now take us over, Chair. Thank you so much.
Thank you, Chief Ombud, and greetings to yourself, Honorable Chairperson, Honorable members. The summary of the audit outcomes in terms of our AG audit for the year under review, we have moved from the qualified audit with findings. We actually come from an adverse with findings at the Csos. So we are looking to move upwards in improving our audit outcomes. This is on your far left. And we received our unqualified audit for the first time with findings. We're hoping to move on to unqualified with no findings as we deal with the historical matters. When we look at the right side, which is the assurance levels, for the year under review, senior management has improved. You'll see with the upward arrow. This is in the main the stability that has been created through the Honorable Minister appointing the board, as well as the Chief Ombud and myself, which was senior management vacancies for the stability of the organization. There is assurance, also improvement on the accounting authority, as well as the executive authority. The audit committee is also showing assurance, as well as the internal audit unit. But when we look at some of the root causes for us to still have these material findings, although we see an improvement in the quality of financial statements submitted, which is the far left bottom middle block, there is improvement because we've gotten an unqualified, and in the main, the issues that we had were revenue and receivables. Having a complete register of our database and ensuring that we account for each and every scheme. Quality of submitted performance information is still good. and they've maintained the unqualified audit in that regard. SCM, there are still some areas of concern, but we are dealing with those, and it's in the main, the fruitless and wasteful expenditure issues, as well as the irregular issues that have been caused by previous disclosures on irregular expenditure. Human resource management was of concern because of the high vacancy rates that we still have, but we have a new approved organogram, which we intend to be filling in the upcoming year. Drivers of internal control, we have effective leadership. IT governance is good. Our audit action plans, you'll see there's an upward arrow of improvement. The Chief Ombud had already touched on the issues that we couldn't deal with as at year end, but we can assure the committee that those have been dealt with, and we're now monitoring and improving on the new audit action plan that comes from the audit that was just finalized. If you can go to the next slide. So matters affecting the audit report, because it's an unqualified opinion, we don't have any significant matters affecting the audit report. Financial statements fairly present the state of affairs of the entity. However, we had to do material adjustments to prior period balances. So we had to do quite a few restatements of balances because we were almost doing a modified cash basis of accounting instead of accrual, but we've now updated and the board has approved the accounting policy for recognition of revenue from non-exchange transactions, as well as revenue from exchange transactions. We've cleared those technical issues up, and that aided us in having our unqualified audit from a technical perspective. Other matters that are important to highlight to the committee is the irregular and fruitless and wasteful expenditure. What we have done in that regard is to establish a loss control committee in line with the framework, which is dealing with the issues of long outstanding irregular, fruitless, and wasteful expenditures, where we will recommend either condonement, consequence management, and other issues that flow from that flow chart. Consequence management is one of the issues that has been a bit slow, and this is in the main linked to the slow progress on the VPS matters that you see on the administrative matters. But we have taken some steps in terms of dealing with the people that were involved with this VPS investment, which include dismissal of the former Chief Financial Officer and the Chief Ombud who made these investments. These steps were taken around 2018-19, 19-20. We have opened a criminal case with regards to that, and also listed the Csos as part of the creditors that are due for any liquidation proceeds that may come from the VPS matter. However, we are still awaiting the SIU investigation reports, the final ones that will follow the money and try to recover from the individual's asset basis. So that's why there is that item on the slow progress on the VPS matter, something beyond our control at this point, but we are monitoring and following up on this each and every financial year. We also had issues of policies and procedures not timelessly updated. These were updated in April. Those are the meetings that set post year end that the Chief Ombud had touched on that we couldn't do at March as at year end, but we have since updated some of the policies and procedures post the year end. And we had to, as highlighted earlier, deal with issues of overstatements and disclosure notes where revenue was concerned because we collect levies, the Csos levy, and some of the inconsistencies identified in the APR, we've corrected those, and also fixed some of the accounting treatment that we had on licenses, and we've corrected that going forward. Next slide. Okay, some of the remedial actions to address the 2022 audit, the one we've just received now in terms of the management letter, we have developed the audit action plan and the remedial actions. We are monitoring them on a quarterly basis in terms of implementation of these, and some of them in the main include checklists that we have developed, updating records on a monthly basis. And we have revised our accounting policy, as I alluded to, on revenue and controls, as well as document management. So we are now billing community schemes. In the past, they didn't used to receive invoices from the Csos and bills. We are now have implemented that. We are billing our community schemes and the entire community universe, schemes universe that the chairperson has touched on. We are cleansing that data, and we'll see those impact in the current financial year. Revenue collection drive is underway and to deal with the issues amongst those that were listed, the database. of our governance unit. And we have also started to charge interest on outstanding levies in line with the PFMA. In the current financial year, we've implemented continuous monthly reporting. So the Chief Ombud does have monthly EXCO reporting sessions where we can follow up and see if there's any corrective measures in terms of not achieving targets as an early warning system, so that we're able to follow up timelessly before the end of each quarter. As highlighted earlier, the Loss Control Committee is established, and it does have 3 independent committee members. And this in the main was to ensure that we do have traction in terms of the recommendations. If it's only us internal people, some of these recommendations might not move, but in having the independent members who chair this committee, it assists on the recommendations reaching the accounting authority and ultimately implementation. Next slide. So on our financial performance on the revenue income side, as the Csos, we collect the Csos levy from each community scheme. In the previous financial year, we had targeted 217 million, but we under-collected 182 million on the levy side. But in the financial year under review, we have done well. We've over-collected with 262 million. We had an over-collection of about 22 million. Government grant, it's what we received from the Department of Human Settlements, quite stable. We commit to those in terms of the shareholders compact, and we carried out those activities. Interest income, as the other entities have touched on, has not been doing quite well because of the economic conditions that we were faced with. So we have collected on our projections in terms of interest income, but we have received a directive from National Treasury to now invest in the CPD, which has a more positive impact on the interest earned. Dispute resolution income, we've over collected in the year under review by 90,000 Rand. And these are the 100 Rands and 50 Rands we use to collect for registration of any disputes and conciliations that come through to us. But we've now since waived that fee to ensure that there's more efficiencies in our systems. And it also links nicely to the items that the Chief Ombud was presenting, that we've dealt with the backlog. In the main, there were those gaps that were existing in our processes to be efficient. So we have collected in total 292,847,000 for the year under review. I'll carry that amount through to the next slide. Next slide. Okay, so of the 292 million that we've collected, we had actually envisaged to split it according to the 3 different programs of the Csos, allocating 155 million towards administration and 121 million towards regulation, as well as 16 million towards education and training. However, the estimated amounts that we had envisaged to spend on those programs, 140 million, 109 and 14, it was an over collection on revenue, which obviously resulted in a bit of an underspending in that year. In the previous year, you'll see we do have the appropriations that were finally set down in terms of what we've collected, which is 243 million, and we only managed to spend actual expenditure 121 million. So we had huge under expenditure and had to surrender some funds to the fiscus in the previous financial year, but we've since seen an improvement of that in the current financial year under review. Next slide. So the key messages from the financial side is that although there is still a bit of underspending overall, it has improved from the prior periods to the current period. So we do intend to apply for rollovers and retention of surpluses from National Treasury, as we have done. And some of the issues in the main that had resulted in these underspendings is the delay in the procurement plan being rolled out timelessly. So we are trying to ensure that we commit these funds before year end. We do appoint the service providers that need to be appointed. One of the key areas that resulted in a huge underspending is the BESS project, which is the Csos Connect. It's a huge business automation in the entire automation of the Csos. It has been awarded and it's underway. And then we also we will ensure that we improve on our revenue collection on the levies, and ultimately that will improve our outcomes towards a clean audit. We are currently reviewing the Csos levy model in terms of making it transparent, and also making sure that people understand how we calculate this levy, what it comprises of, and how the levy was determined. So those are some of the legislative review inputs that we'll have as we input into the process. I'll hand back over to yourself, Chief Ombud.
Well, thank you very much, CFO, and thank you so much to our chairperson and honorable chair of the portfolio committee and the members. We are very glad to recommend the Csos 2021-22 annual report to the portfolio committee for its consideration and noting. And thank you for the opportunity. We'll be glad to take discussion.
Thank you very much, Csos, Ombud and the CFO. Thank you very much for the presentation. I'll now open this presentation for discussion and question and seeking clarity. Questions, sorry. Can we see the members who want to speak on the matters? We have Honorable Mohotu, Honorable, I note Honorable Mohotu, Honorable Emma Powell, Honorable Nancy Hlwai. Any other hands, members? Honorable Malematsa. As I have noted you can then proceed. Honorable Mohotu.
Thank you, Chairperson. I would like to thank the presenters for the presentations. My first questions will be directed to HDA. The HDA stated in their, I beg your pardon, the HDA stated in their action plan that by the 30th of September, they would have strengthened their internal controls within the supply chain management and finance to detect irregular expenditure. So the question is, has the entity achieved its objective of strengthening internal controls within the SCM and finance by now? Because right now we are in mid-October month. And then again, according to the action plan, how often are you going to monitor that the processes of the supply chain management are adhered to in order to curb irregular expenditure? You have also stated that the entity is not using the same audit standards as those of the Auditor General. Why are you not using the same audit standards as those of the Auditor General in order to avoid discrepancies between your audit outcomes and that of the Auditor General? You are aware that most of our poor people are staying in unconducive, overcrowded conditions, but we are unable to meet the 1,000 hectares of land which was supposed to be rezoned for human settlements. You only achieved 607 hectares of land, which you made a target of, instead of achieving 100% of the target that you set for yourself. What measures have you put in place to ensure that in future, if you set yourself a target, you ensure that you achieve it? And then when we go to your program 3, you set yourself a target of delivering 780 housing units. Instead, you did not achieve anything because the target that you achieved there is 0. Yet you know that our people are suffering. They don't have conducive places or houses to stay in. Again, you set yourself a target of delivering 2,787 of IBT housing units, but you failed to deliver those houses. Instead, you delivered 1,685. How are you going to deal with the challenges which made you fail to achieve your set targets in the financial year 2021 to 2022? What are the reasons which led to the contractors withdrawing units allocated to them, which caused the entity not to achieve its target of 1,463 houses in Limpopo? I'm now moving towards Csos. These are the following questions that I'm going to ask to Csos. What plans have you made to ensure that all disputes are conciliated within 90 days? 28% of disputes were adjudicated within 90 days, were supposed to be adjudicated. 28% of disputes were adjudicated within 90 days instead of 85% targets, which you have set for yourself. How are you going to ensure that 100% disputes adjudication is achieved in future? On program 3, you set a target of 80% of community schemes requests for executive managing agents, which I beg your pardon, 80% of community schemes requests for executive managing agents awarded to previously disadvantaged individuals, but you did not meet any target. Do you have the timeline on which the awareness campaign will be coordinated on the importance of executive managing agents and the appointment process? Under financial performance management, how are you going to improve on processing and reconciling control? And how are you going to ensure that there's effective and regular reporting and that there is compliance of PFMA and supply chain management, and that there is continuous monitoring? My last questions will be directed to EAAB and Ppra. Fraud prevention target of 100% was not reached. Instead, you did not achieve anything here. When is the fraud prevention plan going to be finalized? What are the challenges that led to the fraud prevention plan not to be achieved? It is stated in your presentation that the contracts of the disciplinary members expired in the financial year 2021-22 as a result of disciplinary hearing outcome was enforced, hence a 0% target was achieved. Why did the entity not act on time to renew the contracts of the disciplinary members to ensure that 100% disciplinary hearing outcomes are enforced? On program 3, you stated that 60% of the number of estate agents enrolled for CPD and CPD requirements in full instead of 90%, which was targeted. Which intrinsic and technical challenges have hampered the 90% achievement of estate agents enrollment for CPD? What is the entity going to do, or what plans that the entity have to ensure that in the financial year 2022 to 2023, more than 40% of historically disadvantaged entities participate in the property sector? Thank you, Chairperson. Thank you, Chair.
Thank you very much, Honorable Powell.
Thanks, Chair. I've got a lot of questions. I'll try and move as quickly as possible. So firstly, to the PPRA, I'd just like to commend the new board on the decisive action that they've taken. I know that it's been slow drilling through hard walls, and I know that the resistance and the personal attacks have been clear. And I really do think that this committee owes the new board a debt of gratitude for the action that we have been calling for, or some of us have been calling for years, that previous boards have not had the spine or the backbone to take. So I think that I'd just like to preface my questions with that thank you. Can we please have an update on the new queries that are coming through on the online query management system, and what timeframes the entity is applying to queries that come through on this system? I'm often contacted by agents and by associations who say that this online query system is just completely broken and agents simply don't know who to query. So what's being done to fix this issue? What was the justification for the revocation of the exemption that was provided to over 60s to comply with the PDE requirements? Is the PPRA aware of the implications of this compliance notice on agents over the age of 60, given the short time frames? Then interns who have exceeded the maximum period of 2 years to obtain the required qualifications were given until the 31st of January next year to comply, failing which they'll be deregistered. On what legal basis was this extension granted? Was there a legal opinion solicited? Then there appear to be 30,900 interns, which is if you add the cumulative total from both the reports. Taking a 2-year period into consideration, as many as 20,000 of these interns might be deregistered in terms of training. Can the PPRA consider amending the educational requirements to enable these interns to pass the PDE4 exam in good time so that they can remain registered? Then fidelity fund certificates now, in terms of the new act, need to be issued or can be issued for a 3-year period, which is something we welcome. But newcomers are required to pay a fee of 1,940 Rand joining the industry. The PPRA is empowered to invoice annually rather than for the full cumulative total. And this would reduce the payment of this fee dramatically. If you can imagine, if you're joining the industry in order to generate money, 2,000 Rand is quite a lot to have to pay in fees. Would the industry consider invoicing on an annual basis? Then the Property Sector Transformation Fund was to have been established by the 1st of August. Has this been done or achieved? 2 more questions. Rebosa was successful with an urgent application last year on the FFC issue, as all of you know. They subsequently applied for a contempt of court order in respect of non-compliance. What was the outcome of this? And what is the situation in respect of the PPRA's legal fees that they had to compensate Rebosa for? And then lastly, I've just actually this morning been contacted by somebody who's concerned about penalties. It's an issue that comes up quite often. So the PPRA apply this, you could say, retrospective fines and penalties to agents who erroneously failed to deregister. And so we're seeing some agents, for example, accumulating in excess of, say, 35,000 Rand in fees because they didn't re-register. Can the PPRA let the committee know how this requirement, this deregistration requirement, is explicitly communicated to agents when they don't renew their FFCs? Because my understanding is the debt prescribes in terms of the Prescription Act. Now, I'm not sure that charging this these backdated penalties is necessarily legal in terms of the Prescription Act. Okay, moving on to Csos. So I think that Csos is working to turn the corner. I had a very positive engagement with some of the senior officials earlier this year, and I was very impressed that on many of the matters that we discussed, the Csos stuck to their word. So I would just like to thank the leadership for having done that in respect of the matters that I raised. Obviously, some of the issues are still ongoing. So my first question is, and I've seen the draft directive on PAPI, so the issue that we have in terms of schemes providing scheme members with information. When is the practice directive, the draft practice directive, going to be finalized and issued? Then is Csos going to implement an internal review procedure noting the shortfalls in terms of Section 57 of the Csos Act and the lack of internal appeal mechanisms? What is being done to deal with adjudicators who declare illegal rulings that are essentially devoid of the application of the relevant acts? I know that I escalate constantly to Kanozi, the adjudicator general, who's exceptional. She responds to me within 10 minutes most days. But the number that I have to escalate is indicative of the quality of adjudications coming through. And it's not sustainable. So can we have information on that? And then I've got a few more questions. I've actually submitted these as PQs, so I'm not going to waste the committee's time. Okay, no, I've submitted PQs. You'll receive those in your inboxes. Now, moving on to the HDA. Chairperson, this is Groundhog Day. The minister, in her opening notes of the annual report, notes that the HDA has achieved the lowest levels of performance since their inception in 2009. 29% of targets met. We've seen 2 administrators, 2 CEOs just in the previous financial year that's under scrutiny. We've seen 27 resignations, 3 suspensions, 0 dismissals. The head of corporate services and the regional head for Region B earned 2.4 and 2.5 million rand. It's more than the president of the Republic earns, but the entity is meeting 29% of their targets. Now, Chairperson, I'm going to make a statement here that I think would be very difficult to disavow or to deny. The previous minister made sure that politically connected cronies were moved into key positions. Their tenure was insecure in order to dilute their authority and the authority of the accounting officers and the accounting authority. And from what we see before us today, all of our warnings about the unsuitability of the characters that the previous minister moved into permanent acting positions have now materialized. Now, I sent letters to both yourself and to Scopa over 2 years ago requesting an inquiry into the affairs of the entity. Despite repeated warnings, our committee did almost nothing to act. Now, despite our BRRR recommendation, which was tabled in Parliament last year, stating in relation to this entity, and I quote, that progress on all audit action plans, investigations, and consequence management should be provided to the committee quarterly. We have not had a single quarterly presentation on compliance with the audit plan. So this means that our committee is in dereliction of its own undertakings before Parliament in terms of the stabilization and the turnaround plan of this entity. Now, the findings contained in this year's annual report are truly staggering. The chairperson of the Audit and Risk Committee noted that the committee is concerned with the lack of implementation of internal controls that are designed for the monitoring of compliance and adherence to legislation. According to the audit report, the accounting authority and management did not adequately perform oversight responsibilities over the preparation of the annual financial statements and compliance with the law. Auditors were unable to obtain sufficient appropriate audit evidence that disciplinary steps were taken against officials that had incurred fruitless and wasteful expenditure. This is because investigations were not performed. Now, this is a year on from the entity having presented their original turnaround strategy to us as a committee, undertaking to ensure that all of these obligations would be met. And now in this audit report, we're seeing again, no evidence that disciplinary steps have been taken is available because investigations haven't been performed. It's literally, we are reading a repeat of the report that we've had for the past 3 years, and the indicators are deteriorating. Then comments made in respect of the report on the audit and financial statements regarding irregular expenditure note that the public entity did not have adequate systems for identifying and recording all irregular expenditure and fruitless and wasteful expenditure, which now, according to the report, stand at a cumulative 153 million rand. I've scribbled some notes down here in terms of the 52% of this that's been dealt with. I'll move on to questions in this respect in a minute. And then we also note that the public entity made payments in contravention again of SCM requirements, resulting in additional irregular expenditure of 61 million rand. So I'm not going to read the committee the specific prescripts of the Public Finance Management Act, but if I reference section 81, which talks to an accounting officer's liability for committing either willfully or negligently financial misconduct or permitting unauthorized expenditure, and then the criminal culpability that an accounting officer and an accounting authority are subject to in terms of the Act, and the fact that in terms of section 65, the minister needs to actually present in Parliament the findings of disciplinary boards, sanctions imposed by a board, and these findings haven't been tabled in Parliament or forthcoming despite repeated requests. We as a committee need to today understand from the new board, understand you've taken over and you're trying to stabilize the ship. But we need to understand what consequence management in terms of the Public Finance Management Act is being taken. Are members of the previous board being subject to criminal charges? Are members of the previous board being reported to the relevant authorities at Treasury in terms of the Public Finance Management Act and the Public Audit Act? We need to understand when we as a committee will, in terms of section 65.1, receive the findings of the disciplinary board of the HDA, the detailed sanctions that have been imposed against an accounting officer and an accounting authority. Year after year after year after year, we're told to simply accept that the board is dealing with it. Now, that's no longer good enough. So my specific questions are, what action has been taken to charge officials involved in stated irregular supply chain management awards? What action has been taken to blacklist companies and recover the proceeds of stated irregular supply chain management awards? We see that only 25% implementation of the approved internal audit plan has been achieved. That audit plan was supposed to be presented to this committee quarterly. That hasn't happened. Why has only 25% of this internal audit plan been achieved? Only 26% of the approved risk management plan has been achieved. Why? What is the status of the condonation committee? Now, I referenced this 81 or the 52% of matters regarding irregular, fruitless, and wasteful expenditure that have been dealt with. Who has been held accountable in terms of these investigations? Are there individuals that are subject to disciplinary or criminal charges? Then what is the status of investigations into the acting CEO, Stephen Poya, and his tenure with the agency? Is he subject to a formal investigation? Have criminal charges been made? What is the status there? Then similarly, what is the status of investigations into Daphne Ngoshing and her tenure with the agency? When can our committee expect a section 65(1)(b) letter? And then in terms of some of the media coverage that this entity has been subjected to, what is the status of the investigations into allegations contained in the affidavits that were submitted to the entity leadership in relation to the conduct of the ex-acting CEO by Malik Kashi in August last year? And then can the board please speak to consequence management processes at a broad level? That's all from me. Thank you, Chair.
Thank you, Honorable Sefai.
Good morning, Chair. Good morning to the honorable members, the board members, and the officials present. A newborn baby is born or reborn again. I raised the issue because I had the chairperson of the board of HDA trying to explain about the weaknesses and the reasons. And just to say to him, cool down. Just cool down. When the department established HDA, it established an entity which should be able to support the department and try to curve along the issues of bureaucratic procedures of the state to give quality of life of our people. That was a test case. And in the most financial years, there were huge challenges of the HDA. And that is why the minister established a process of stabilization of the organization, which was to say, we need to make a turnaround. Perhaps the processes and procedures that we put in place have managed to cripple the HDA in its performance. And then that analysis is what has brought us here today. We note the weaknesses, we note the issues that you have not managed to do, but we note the issues where you have tried within a short space of time. But that does not mean you are all correct. It's important that we highlight areas that we believe we should strengthen and put efforts to address them. Because the reason why we all here, the chairperson of the board, is that we should alleviate poverty and give equal life to our people. I wanted to preface my presentation and my questions, Chair, on that. I do want to say that well done for now from where we have taken the HDA from, but please proceed and address the issues. Coming to the overall annual report, I picked some issues, not all, the report, Chair. You have mentioned your executive overview well with its 6 pillars, which I think they are fundamental directives for you and your board to do what's supposed to be done. I hear that Honorable Powell is contacting you and officials many a times, but I think that's proper, it's fine, it's okay. Program 1. It makes my stomach to grumble. It's in red. A house that does not have rules to set the pace to do things well is dysfunctional. Please pull up your socks with your team. Program 1 is red, totally in red. Program 2, which is a land management. In terms of the land rezoning, you were to achieve 1,000 hectares, you only manage 607. Also remember, this is not one of those issues. This speaks transformation to us, to this government. It speaks transformation when you deal with the land processes, land plan, land rezoning, and all those particular processes. 750 hectares was your target, but you achieved more. Congratulations. It's exactly what we want. Where you can, please move with speed. The program 3.1, you have got new indicators. We are awaiting on how we are going to perform on that. We had about 4 informal settlement to phase 3 that we have achieved 5. I don't know, maybe people don't understand what is achieving phase 3 in an informal settlement. Is to give dignity and investment to the person where you are in a process to finalize a house. This is a good progress, chairperson of the meeting, which I think it's commendable to the board. Program 3.2, the catalyst projects and distressed mining. You've managed to achieve, the target was 50, you managed 50. But where I do not agree with you, chairperson, is that where I don't agree with the board is when they had a target of 50, but they have not finalized the business plan, the business cases, and the financial plans. Now, the issue is the international and the global community is what they want to see, the process of planning before you get to the end result. No one is going to come to you, but they will get to your website. And if these are in good order, you are a good organization. You are a very, very good, efficient, and effective organization. Please try to get to those. They are fundamental. Program 3.3, the regional coordination. You had a target of 1389. You then only achieved 210. It's not a good reflection, even to yourselves, without being said by anyone. Also, you had a 500 target of service sites. You've delivered 0. We had 1554 service sites. You've delivered 0. I don't know if you had time to take holiday. You left the organization. Then you obtained 0. 0 could not be a bad achievement, but it strikes your mind to say, what is it that we didn't do? And what is it that we can do well and better for us to achieve something instead of not achieving? Please address that. It's not a good reflection. Out of all the issues that you have tried, monitoring evaluation. When we speak monitoring evaluation, chairperson of the meeting, we mean all those watchdogs that government believes on in an institution, in a professional institution. Government is a professional institution. Risk management, internal audit committees that should be in the establishment, monitoring and evaluation committee. We should come up to call on different program units to say, you are not moving well here. This is what you promised. You are far from here. Can you clarify and clean out this? And they should have authority, Honorable Chairperson. They should have authority. Sometimes they only managers or middle managers that are given that work, and then the boss doesn't listen to them. If then that could happen, you'd have a better organization, Chair. Coming to audit outcome, I'm going to be fast, Chair. The findings. No sufficient audit evidence, no record keeping. I think it says by its own that weaknesses of the red administration, it then reveals here where structures that are necessary for professionalism are not in place. Systems are the best, Chair. Systems of systems. You must not expect yourself to go and see the records, the registers of the HDA in Elusikisiki. They should come to you sitting in your office and you analyze as they are. For as long as your systems are speaking to each system of each fragmented offices of HDA. The land inventory. This is critical for us, Chairperson, very critical. Where is the land? How much land do we have in Port Elizabeth? And what is that land for? Because not all the land that is there is for housing delivery. Other pieces of land are not deliverable. But do you know where they are and how big are they? So that you have got a database of that particular land, and you have a land valuation in the whole process. Systems of systems also work on that. The audit action plan. It's important, Chairperson of the meeting, that the board should appreciate that they've got a structure that is established by law. The AG's office that assists them to address issues outside the box. And they must take that well and use that. The audit action plans that have been given to them, you've got no asset register. You don't have. It's not fair that that is not responded to well when it was said to you. The irregular expenditure. Very clear, you've got very weak systems where the statement of the budget versus the actual could not speak together. And why? So therefore, you have got financial structures or officials that really are not here, are not strong enough to address the issues, because this is a very obvious weakness. I do task this present CEO, who's 3 months or 4 months in the office, and the CFO, to please try strengthen the structures for you to be able to be effective in HDA. Strengthen them. There's a lot of audit action plan that has been given in terms of what were the weaknesses of HDA. Use those as your strength. Saxolela nje uba inyanga zisentathu kodwa ke sithi nyathelela phezulu konakele. A bidder that obtained the highest points, we would like to hear what happened to that official who did that. It's an obvious thing. We don't want to have suspicion. We want to be told by you, out of your processes and your procedures, why and why did she or he did that? Because that's unfair to that particular person. She has suffered. He has suffered because of the state that he or she believes in. Please you promise the training for your SCM staff. It's very urgent. It's very urgent. Creditors with debt balance, incorrectly classified and payable. This is also very, very unfair. I'm using unfair, very weak word to use, but it's sad and cruel. It is sad and cruel. Well, there are those that are not being paid, but there are those that are paid without being owed. Irregular expenditure. I think the presenter clarified well the transactions of 129.9 and also the 157 and the completed transaction of 81 and what is remaining, which is 53.4 million. My little language, for me, there's been no value for money. You may correct me. There are people that are funny in understanding the terminology. But this is said when it can go to the public. It cannot be interpreted well for us. We want to see what the brand that we've given to the HDA, that of rebuilding an HDA trade. We want that brand. It's a pity that we want from you, Chairperson of the board. We want that brand to come because I think we have tested very sad processes, and we believe that we should be the best to put a good order to the HDA. And effective monitoring is what is going to succeed HDA. The second one is the issue of very, very important, efficient, and internal business processes that are known by the institution, not by the few. So that everyone knows we're working towards achieving that. Let's rebuild an HDA trade. Coming to the consequence management, we're happy to hear that you are dealing with Talana TRU. I wish we can get a report very soon about the disciplinary processes of Talane and the Tanzania TRUs in the process. The issues of land management and the issues of land parcels and land inventory, I may be repeating myself, are critical for this country. That's where the redress and the transformation is. Please don't take it light because it's one of your briefs. Do it better, do it good. Coming to EAAB, just one question, Chair. EAAB is saying, we have not established a committee for disciplinary up to now. What does that mean? Don't make us to be suspicious. We believe on the management of EAB that does have capabilities to deal with the issues. If then there are difficulties, which perhaps could be internal, you would have a right to approach the department to come and intervene. You have a right to identify some people from outside to come in and address the matter, but not to address the matter is not giving you a good image as EAAB. Congratulations, HDA. I think we're working towards the success story of the trade name, rebuild HDA trade. We do believe that in the next report, the annual report, you will be 100 upon 100, upon. Thank you very much, Chair.
Thank you very much, Honorable Sifai. Honorable Malimaza, you were the next. We have lost you, or should we? But I can.
I think I'm here, Chair. You can't see me.
Okay, proceed.
Yeah, and I want to agree with you. The network is very bad here in Gauteng. Gauteng South, because somebody will say I'm in Gauteng. Chairperson, let me take this opportunity also to welcome the presentation. Presentation has element of honesty. People told us what they've done right, bad, and good. We appreciate that. And I want to take this opportunity to thank Honorable Ppra for being so detailed. And I want to tell her that you covered me in many aspects. I don't need to repeat because your word was gonna be my word. The highlight, Comrade Chair, that I want to send the entities that you see the asset register and invoice is the same. If you send somebody to go and purchase whatever purchasable items, and that particular person deliberately decide to throw away the invoice, you must know there's something that is hiding. That also goes to the asset register. If it's not used for other things, some people want to have cross deals on the issue of land. Entities, I think this statement also must go to all of you. You are summoned here not necessarily to come and give us what is your future plan. We are here to discuss the AG report. We want to know why these things have happened. We are talking of the formalization of the informal settlement, and that at the center, you'll find some bucket systems. If you are to tell the committee that we never achieve anything in terms of eradication of the bucket system, you are telling the country that we have deliberately made sure that those who are using bucket system, even today after 28 years in democracy, must continue doing that. So you are getting your salary every month, there's no problem. Let me zoom straight to EAAD, as Comrade Ppra dealt much with the HDA. Comrade Chair, we are in a growing nation. It can't be correct that an educational program is not implemented, whereas the entire country and all the departments agreed that huge chunk of money must go to educational programs. We are a dying, if not an aging generation that is about to die. The future lies with the young ones. In this case, educational program which was meant for youth, and the number is at 2,000 from the chairperson. We are told that 0% has been achieved. Why do you leave? Why do we have this entity if that entity is not doing anything for the interest of a youth? And the very same entity will tell you that it has decreased the percentage in terms of empowering women. Yet we are still saying this is the entity that is holding the future. You are not holding the future of the country if you are not taking care of the women who suffered a lot, who were discriminated by the outgone apartheid regime, were not given opportunity to be at or to be at the leading position. Many of these women, they are heading their families. Many of these women, they are taking their kids to universities. They need to be empowered. You are deliberately, through your programs, not able to assist them. We've got a huge chunk of youth who are running around the streets, Eastern Cape, Cape Town, KZN. You come with this program to us, and we give you funds for that particular matter from the chairperson. You are coming today, and it has been revealed by the AG to say, no, 0% of that program has been started. Then yet we must say, no, it's fine. The other aspect, Comrade Chair, that you'll pardon me, I'm trying to be fast because my network is not that good. The other aspect, which is not far from the asset register, is the issue of the disciplinary hearing. If you are not doing anything, it's now 6 months. What kind of lesson are you giving to other staff or other people who are behaving according to the code conduct of the institute if you are not dealing with those who are transgressing, who are misbehaving. So I don't think the entities necessarily helping us. They must consider coming to us and tell us what is it that we must do with them. Remember, the minister through us has got the right to disband them if they are not necessarily carrying the mandate of what they exist for. And I don't think it is good that we must come here and massage them, whereas they are denying our youth, 2,000 youth, an opportunity to be a better nation. And Comrade Chair, I want to emphasize to the entity that we are now learned. The issue of percentage, we are very aware that any number that you can divide into two, it causes 100%. You come here with the MTSF program, you've got one program, and that particular program, if you didn't achieve, you got 0%. You come here with a program that has got only 2 items. You do one, you speak as if you have achieved 50%, only to find that you have carried only one. So I don't think that is the right way from the chairperson, and the EAAB must know that we are not happy, and because we are representing the nation is not happy with them. The Csos, your achievement of 82% comparing to previous year of 66, there is a show of improvement and you are going forward. I don't think we need to discourage you. Instead, we need to say, keep doing the good work. We are proud of you. And you will understand that your mandate is different from this other mandate. And I'm very impressed that you know that your mandate is there exactly where it matters most. You need to deal with the scheme registration. It's not something that is just an overnight thing. It's something that deals with poverty. People are coming together, you are registering them, you are formalizing them. I think with what you are doing, one is very happy. And also the manner in which you are dealing with the dispute resolution and you are able to clear them. And with both either physical or visual, I think one is very happy and one supports your unqualified audit opinion. Thank you very much, Chairperson. Pardon me, one should have gone hololol. Unfortunately, the network is very bad. Thank you very much, Chair.
Thank you very much. Can we then have Honorable Tseki and Honorable Buthelezi following one another?
No, Chair, mine is very simple. I wanted to call order actually to Member Powell. Maybe you did not see me. The issue of deployment of like-minded to these institutions, as Member Powell is alleging, I think she's out of order, Chair. And these allegations of saying every time that this is what I said, this is what I said, it's getting to my nerves, at least as an individual and as a member of the ANC, that we should respect popular decision and she should work within those decisions. She has raised many issues in many meetings and we have been considerate on many issues that she is raising. But on one issue that we have differed, she will always make a cry. Chair, I don't have much to say. That was just my order during that time. Thank you.
Honorable Buthelezi.
Thank you, Chair. My questions are directed to the EWAB. The weak control environment in the production of financial statements results from the inadequate review of annual financial statements by senior management. So my question is, what steps have been taken to review the performance of senior management responsible for these misstatements? What plans are being made to capacitate this level of management to ensure that this reoccurring issue ends here? What will the consequences for those involved be if this issue continues? My next question to them is an issue identified here is the lack of internal auditor function. The Audit Risk Committee has since been appointed. Please provide us with details of this appointment and what can we expect from this committee now that it's in place. The EAAB is seen to be responsible for the professionalism of this industry. However, irregular expenditure of nearly 2 million has resulted from a lack of fairness and transparency in the breach of the pillars of procurement. How does the entity intend to rectify this broken trust within this industry? Targets not being met because of lack of capacity, skills, or external circumstances are not good, but can we be afforded some understanding, because nothing at all has been attempted. The fact that nothing at all has been attempted is unacceptable, especially in the case of anti-fraud and corruption measures. In the climate and history of the country, not finalizing the fraud and anti-corruption plan is just not acceptable. When can we expect this plan to be finalized? If it has been finalized, kindly provide a detailed implementation plan. My next question, Chair, will be directed to, sorry, just a second, to the Csos. In regards to the mentioned Csos Connect project, what was the total cost of the Csos Connect project? What challenges were encountered in the implementation of the project, and how were these challenges overcome? A lack of systems to automate core operations has been noted as a contributor to non-performance. How does the Csos envision the automation of governance systems within the entity? As vacancies were referred to as another key contributor to non-performance, can the Csos provide an exact number of all remaining key vacancies in the entity, as well as a timeline in which we can expect these vacancies to be filled? Thank you, Chair.
Thank you very much, Ms. Buthelezi. Just to and join honorable members to welcome the presentation from the entities, and I'll start from the bottom with Csos and congratulate the board, the previous board and the present board, because you had created stability and employ the ombudsman, which as we took over as government, as the committee, there was acting ombudsman, and you appointed Mr. Mkhize as your ombudsman. He put the system in place, and today we are talking about the qualification, and thanks to that, and we want to join members to say that you should then be able to address the issues that the Auditor General has raised for you to reach your target of the clean audit. And it is very clear that you have all the necessary committees, governance committees, and your executive are doing the good job. Convey a message that the board and the ombudsman, well done, you have done a good job. The second entity, which is EAAB and stroke Ppra. EAAB, you have performed 65%, and which was not bad, and then you target you're short of 35%, which was not bad. But with the new a company, you've performed 23% over 77%, which is a worrisome, which even the Auditor General has raised that. And we want to welcome the work that you have done on the disciplinary process that you have undertaken for your CEO, and we want to employ you to finalize, make sure that the process is finalized, because without other executives, we will come here next financial year would have the same processes, the same problem of you not performing and not attending to some of the issues that the Auditor General has raised. And I'm not sure whether you would want to actually tell us about the alleged allegation of the chairperson of the board of the EAB and the Ppra, and what has been the reaction of the department on the matter, and how far is the process? On irregular expenditure, there is no indication that you have started the process of condonation, because you have to have the condonation committee for you to, which must be submitted to yourself and then later to Treasury for the condonation of some of irregular expenditure, and which would actually fast track the issues of fruitless and wasteful expenditure, because you'd know that which are those issues that you have not lost the money in the process of this irregular expenditure occurring. The last one is the HDA 2, and congratulate you, Chair of Ppra and EAB, because you came to us and then you indicated that to transcend from, is it the correct English, from one entity to a new one. We know that it's not an easy task, but we hope that in the next financial year we'll get a good result. And then HDA, Chair, your summary says a lot, and we are noting that the issues that you have raised, what you have done, and with the space period of time, you have appointed the CEO, the CFO, and you have established a necessary committees that will be able to help you to resolve these issues that the Auditor General have raised, because in an environment where there is no stability, there is no accountability. Therefore, you would then have challenges. And since you have taken over, you have done your best in making sure that 2 executives already they're out of the system, and you are still actually indicating that you're going to follow the process even when they're outside the system, which is a good sign that this entity is in a good hand, and we want to applaud you for that. But we are not appreciative of your performance to the 29% performance, which is it's a worrisome. And we hope with this team of executive that you have employed, there will be a progress as we move forward. And the narrative that this committee has not been engaging with yourselves is not correct, and it's false and is misleading the public, because Mr. Cheney came to this meeting and presented the intervention, and Dr. Mahapa did the same, as you have mentioned in your executive. Yourself came twice in this committee. On the 11th of March, we've called you to come and explain how you're going to stabilize the committee, and you came and did very well. That this is how you're going to handle to stabilize the entity. And then the 25th of May, again, you came to this meeting and account on the matters that you have you were dealing with in response to the Auditor General. And one of the things that this committee has done was to make sure that the entities audited by Auditor General, so that there is that coherent in the system, and ourselves would then be able to work with Auditor General to deal with some of the issues as he has raised. And we want to welcome your commitment to put this organization in a better space to be able to perform its task as required. The issue of irregular expenditure, as you have started, you have submitted to this committee the condemnation report, which you are still attending to, which it must be attended through the board before it goes to the National Treasury, which we acknowledge that as a committee. And you have done what a human being could have done to deal with the matters as required by the law. And thank you very much for the presentation. I will then ask HDA to start responding, and then followed by other entities.
Thank you very much, Honorable Chairperson of the Portfolio Committee. I think there are quite a number of common concerns, and we appreciate the frankness with which members of Parliament are scrutinizing the report that we have presented, as we understand that is the voice that the people speaks through, is through yourselves, members of Parliament, and we have to account about how we are executing our responsibilities to the citizens through this portfolio committee. And I will make a few remarks as the chairperson and hand over to the CEO to deal with the areas that are more detailed and require operational insight. I think the question that Member of Parliament, Honorable Member of Parliament Mukhotu asks it's a fundamental question, which is, what are the challenges that made HDA to fail to achieve its targets? As we are showing that we have performed badly in the financial year that is being scrutinized. And I think it is followed by questions that were asked by other members of Parliament, including Member Sihlwai and Member Powell. What are we doing about those causes that led to the lack of proper performance? And we have said in the past that as the Honorable Chairperson of the committee has said, we've been here before to this portfolio committee and committed to do certain things. We have said in the past that there are certain reasons for why the HDA is where it is, that we know what they are. There are also issues that we don't know what led to the terrible state of the HDA. That does not mean that we're not doing anything about that. This is the reason why there is investigations, is because we can't necessarily have privilege of every cause that led to why things are the way they are. Part of what we know is that during the period when there was no proper corporate governance, in other words, when there was no board in place, the HDA was managed through administrators, 2 administrators in the year under review, as well as 2 acting CEOs in the year under review. A lot of things go wrong. And I will demonstrate this by indicating what is happening right now with the board that is in place, to show you that if that board is not in place, it is difficult for the organization to function properly. So when we came into office, we had to establish different boards that are required by the HDA Act, as well as the shareholder compact between the HDA and the Department of Human Settlement as the shareholder of the agency. We had to establish those committees so that they can then provide oversight on the work of the executive. In the absence of those committees, there is no set process of where the executives can be held to account on the performance of the organization. For instance, the Audit and Risk Committee provides monitoring on performance against the annual performance plan. It is meant to monitor internal controls and compliance with the PFMA. This was the only committee that was in place, and I must say that if you look at all their reports, they will report having isolated areas where there were no compliance. They will have reported their dismay with regard to performance. But because of the absence of a board, their reports could not be acted upon, because the board is able to intervene when these reports are brought to its attention. We created the Land, Property and Project Development Subcommittee of the board, which monitors projects across the country on a continuous basis. We sit with the executive and they tell us what is the status of implementation of projects in all the provinces. It provides guidance to management and sometimes makes interventions that are necessary that management may be struggling with, and make recommendations to the board. We have the Social and Ethics Committee, which is very much seized with the issue of enforcing fraud and compliance, fraud and corruption policies, strengthening whistleblowing procedures, and also processing those whistleblowing reports, because in the previous time, without this committee, those reports will come and no one actions them, either because they may implicate those who are meant to actually take action on them, or there's just a void. We have the Corporate Affairs and Remuneration Committee that monitors the capacity of the human settlement, human capital in the HDA. It deals with skills and competency to check if the organization has the correct staff to do the work. We have just received a skills and competency audit that we're processing through this committee. It deals with disputes and grievances, which sometimes when they are not attended to, they lead to a very low staff morale. It receives reports on what is happening with cases at CCMA and some legal cases that affects human resource. And it deals with the staff morale in general, processes the training that is meant to assist staff to improve, deals with change management, and I've just reported that it has submitted the organizational structure to the minister. And all of these committees report to the board, and the board intervenes where there is necessity to do so, sometimes by asking the minister to assist us with the necessary interventions. We have also, as a board, been improving relations with our clients, being the provinces and the metros, meeting with the principals in the provinces to unlock where they are blocked projects. Now, in the absence of all of these committees, which was the case in the year under review, you can imagine that a lot was not happening. But the board is undertaking its work through these committees, and that is what we know is part of what caused the lack of performance, and that's what we have done to respond to that at a level of corporate governance. What we do not know is what the CEO reported, that we have established a condonation committee, not just to condone everything that has been flagged by the Auditor General, but because when the condonation committee is in place, its responsibility is to investigate all the cases that the Auditor General has flagged as leading to audit findings. When it investigates those cases, it will isolate, as we have shown in the slide, cases which we think there has been value for money on the expenditure that is incurred, and there has not been a loss as a result of that expenditure. Those cases are then taken to National Treasury to request condonation. There is a strict guideline of requirements that those cases must meet before they are even submitted to National Treasury. So the condonation committee will decide, okay, these are the cases where there might not have been a following of procedure for justifiable reasons, and they will have that engagement with National Treasury. But as that slide shows, it also flags points, cases where it believes this is purely wasteful expenditure. And it recommends what action must be taken. That is the point at which we then entertain what disciplinary cases, disciplinary processes must be undertaken to bring those employees that may have deliberately transgressed the regulations and compliance procedures of the PFMA and all other laws that should govern compliance of procurement of services. So that committee is very important. You will see that, as I've said, we take responsibility of this performance, even if it is prior to our time. This is the reason why you see that we have gone back 3 years to look at and investigate all cases coming from 2018, 19, 19, 20, 21, 22, because we understood it that the findings were being repeated simply because they were not being investigated, and therefore irregular expenditure was not being processed with National Treasury, or wasteful and fruitless expenditure was not being accounted for in terms of consequence management. We are waiting at the board level for that condonation committee to bring to us the recommendations of what must be done or what action is being taken on the matters that are purely for wasteful and fruitless expenditure. And we will await National Treasury to tell us if they agree with everything that has been submitted for condonation. So that accounts for what we can say right now. We can't answer what happened that we do not know, but we're not doing, it's not that we're doing nothing about it. We are processing investigations so that we can be in a better position to answer to you to say, our investigations established that these were the causes of lack of performance or some transgressions, and therefore these are the actions that we are undertaking. So far, as the CEO has said, we have processed some of them. There is still some outstanding cases that need to be processed before we can finalize our recommendations and actions. So I just wanted to make those general inputs and say that we agree absolutely with members about effective monitoring and a common understanding of business processes in the organization. We ourselves, we are emphasizing that this must be the case for everybody who works for the HDA. We should have a common understanding of our objective as an agency, as a trading entity of government, and the processes that we follow to execute our projects, and where they are challenges, everybody should understand how we are responding to them. There are specific questions about certain people that will be answered, or certain cases and points that will be answered by the CE. But I just wanted to say that the Talana investigations and Mdantsane are ongoing. SIU reported to your committee some time back. We ourselves were waiting for those reports. The employees that are affected, they are going through a court case. So the outcome of that will be linked to the completion of that case. Honorable Powell, you asked about the COO, Mr. Poya, and Ms. Ngwasheng, who was the head of strategy. The current status of these executives is that last week we received a notification from the executive that Mr. Poya had resigned from the HDA. So he's no longer in the employ of the HDA as of that time. Ms. Ngwasheng's contract came to an end. Her 5-year contract came to an end, and therefore she also ceased to be an employee of the HDA. We have said it that because we are in the process of undertaking investigations on all the matters that have been flagged by the Auditor General, we will not spare any employee that is implicated when it is found that they have to answer for wasteful and fruitless expenditure. But that can only be known after the thorough investigation has been completed. So even if these employees or executives have left the organization, there are laws in our country and in the HDA that give the HDA the right to follow members that are implicated in what has been discovered as irregular or mismanagement or whatever malfeasance that we need to deal with. And that will be dealt with upon the finalization of such investigations. I will leave it at that, CEO, and request that you deal with all the other questions that have been asked that may be more detailed and why certain performances are at the level at which they are. Respectfully, through you, Chairperson, if I may ask the CEO to answer the other questions. CEO.
Yes, thank you, Chair. Yes, Chair. I think most of the questions, Chair, you have responded to, but the ones that Honorable Member Mokhotu raised that are specific for us at an administrative level. One is the issue of the internal controls, and to say, have we now put the internal controls to be able to see if there are irregular expenditure. The process of controls is an ongoing process, Honorable Member. But what we have done is we have set up controls. There are a number of issues that we had realized where there were loopholes in the controls. We've set up the controls, and then we've also asked the internal auditors, because our internal auditors it's outsourced. We've asked them to come and test our controls. So on a continuous basis, once we've implemented the controls, they test those controls for us. But over and above that, what we have also done is that, as I said initially, we have now employed the senior manager supply chain, who will also be focusing specifically on supply chain and making sure that she sets good standard operating procedures within the supply chain space. One other one is that we've appointed the chief audit executive because the issue was how are we going to monitor that. So we also have a chief audit executive. But above all, as we speak now, we have in our team the compliance manager that we've also employed in the SCM. So what we're using them for is for probity. So we already have the compliance manager who's helping us with probity in terms of the supply chain processes and making sure that all the tenders that go out have been looked at. On the issue of the GRAP versus modified cash, the honorable member has asked to say, why are we using a different method from the the AG. We're not using a different method from the AG, but what we are saying is that as Schedule 3, we are using GRAP, but the departments, they're using modified cash. So the difference between what we're using is in terms of how we recognize receivables, for example, and then, for example, the issues of accrual. On our side, on the GRAP, we can accrue, but on their side, on modified cash, they can't accrue. So because of that, the differences happen as to when they send the money to us, is on their side, is expensed. So they send the money, the funds to HDA, and then the funds on their side are expensed. And then the AG was saying to us, why then when we receive that money, we put it as receivables? But because we could only send, for us to get those funds, the only way we could, it was for us to send them the invoice. So when we send the invoice will come then as project receivables. So those were the issues that the AG had raised. And then between ourselves, the CFOs, and also the national CFO, we sat and looked at how we can then best deal with that matter to make sure that it doesn't recur. And part of the issues that we agreed to is that all the funds that are sent to HDA, they must be gazetted, and then they must also be sent to the National Treasury to say that we will be sending this amount of money to HDA, and then this is the basis of why we're sending the money, so that it also comes with projects. And in that way, we avoid what was an outcry to say that HDA is used as a fiscal dumping. So I think in terms of that, honorable member, I think that we have resolved the issue. And then on the issues of the land rezoning, Chair, the land rezoning is an interdependent role, because there's a part of the land rezoning that is done by us as the HDA, but the bigger part is done by the municipalities. So there are two interdependencies there in terms of the municipalities. One is that the municipalities also have the tribunal. So the tribunal, they don't sit on a daily basis. They are like a committee of council. So they sit on a quarterly basis. So that is one of the issues that have now caused the delays. But the other one is that when you do the rezoning, there's also the dependency, because you remember that you have to advertise that you want to do the rezoning. So when you advertise, the community is given time. I think you advertise for 21 days. And then in that advert, the community also is given an opportunity to say whether they object to the rezoning. And then most of them, when they object to the rezoning, I can give you an example of a number of pieces of land that we have in Cape Town, where we're struggling with the rezoning. We've got a piece of land where we want to move people, for example, in the central line, and then the community there is objecting to the movement. So when it comes to the rezoning, unfortunately, the community also have a say. And then once they put an objection, it takes longer, because it then has to go through the process. And some of them, they don't even want to go through the internal municipal tribunal process. They just go straight to the attorney, to court, and interdict us from rezoning. So the issue of rezoning it's mostly delayed by the interdependencies, which we can move quickly on our side, but unfortunately, we don't have the full control over it. And in terms of the housing units not achieved, Chair, I must put it up front to say we are raising all of these issues without necessarily saying, as HDA, we do not also say we take the blame for some of the things that we should have done differently. So that maybe I should have premised to say we also acknowledge that as HDA, there are some of the areas where we should have done differently and done better. But over and above that, when we granularize it, we will then raise some of the issues that are also there that are delaying the process. So if you look at the issues of the housing units, Chair, We've had challenges. I can mention with some of the provinces where the service provider is on site, but we don't have a list. As we sit now, we don't have a list of beneficiaries. So all of those are issues that are dependent both on us and the municipalities to also then give us the list of the beneficiaries. Because if you would appreciate that in the HSS, you will not be able to build and then when you don't have a beneficiary who will be occupying that property. And then we're sitting, for example, in Mansonville, in Gauteng, where we've finished the properties, we've done everything that we need to do. But the Mogale City municipality, what they need to do is to do the electrification. And because the electrification has not been done, our houses are sitting at 90% at that completion. Because of that, the houses are complete, but we can't put them into our POE because then we can only do that if it's sitting at 95%. So those are some of the challenges that we're sitting with. We've had this challenge, you would remember that with the quantum chair, the quantum is determined at national level, but once it's determined, then the departments, the MECs of provinces must then sign it off in terms of their provinces. We've had instances in Eastern Cape where some of the service providers have moved out of site instead of building because they wanted to use the new quantum, and they are saying that unless the issue of the quantum is addressed, they are not moving. Fortunately for us, the new MEC, we had a discussion with her, myself and the chair, and then very speedily she responded to that and assisted us by making sure that the quantum is signed. We also had some of the challenges that we were sitting with the seed capital, because we also trying to give small businesses an opportunity to also grow. But what we were struggling with, Chair, was to say once we give them the opportunity and we give them the letter, there was no way for them they didn't have the money to build. And then you would remember that in terms of the top structure, it's different from other projects where we are allowed to do material on site. On this one, we can't give them money for material on site. We can't pay for the material on site, so they have to raise the money themselves. But we've been looking at what we can do. We've came up with models that will help us, including our partnerships with the DFIs within government. So where we are now is that we're quite comfortable that we've crossed that challenge. We will be able to assist some of the small companies when they get work from our side. So to that extent, I think it's a myriad of challenges in terms of why we are where we are in terms of building the houses. But part of it, Chair, and then I must re-emphasize, is that from our side as the HDA, we have also dropped the ball, and then we are the first ones to acknowledge that, Chair. And then coming to the issue that were raised by Honorable Member Powell. Honorable Member Powell, the issues of blacklisting companies, we have moved very quickly on those. We've now blacklisted the service provider that was doing the Talani. We've blacklisted both the service provider and the owner of the company, the director, so that we know that there is no going out and saying, I will change just the company and do that. But we've also now, with the one that was in Mdantsane, the PRT there, we are also have written to National Treasury, supplied them with all the documents, and that one is reaching finality of also blacklisting the company. But the contractor there, we had a discussion. We called for a meeting with the SIU, and we said with the SIU, we wanted them to give us a preliminary report as to whether on the basis of that preliminary report, we can then take a view as the HDA to continue or not to continue with the work that they were doing for us. We were quite happy with the presentation that they did to us. And then they have since written a letter to ourselves through the office of the chairperson of the board, in that letter where they are also saying that we should not go ahead with giving the company more work. So we are not yet final, but we are getting there in terms of making sure that consequence management happens. But as you would know, we remain mindful of the fact that the principles of the natural justice should always apply. So we try and apply the principles of natural justice also. It's inclusive also with the staff members. We are doing the investigations now, and then doing them concurrently with that. We then do the condonation for those that we can condone, but those that have been found to be wasteful and expenditure and fruitless expenditure, we are starting the process. As I said, the first one that we are dealing with is the matter that is in the Mpumalanga municipality. We started the process with that one. We've written to the individual concerned, and then we've asked for the reasons why this happened, purely so that we stick to the principle of natural justice. But the chair of the board has also said that the two members that the two colleagues that the member has raised their names, both of them are no more with the institution. But to the extent that the institution was disadvantaged, we will still follow up if there is any other way where the institution was negatively affected. Chair, it will not be correct for me not to acknowledge that members has given us marching orders to say there are things that I am not happy with, and then we acknowledge the issues that a member is not happy with. But we also appreciate the fact that the member has said that I can acknowledge the small steps that are happening. They give us comfort, a member, to know that those small steps that are happening also at the parliamentary level, they are recognized. So on the issue of the raised by Honorable Member Malimaja, there was an issue of the PPE and the issue of the asset register, the incompleteness of our asset register. In the main, our asset register, Chair, is the computers and the office furniture. It's really very small items of asset register, if we exclude the land. So in the biggest, it's really the land. That's what comprises our asset register. So that is why we then said, because of the move from Kilani to the Megawatt Park, the matters of movement were not treated very well. And then as a result, we just dumped everything into one room. And then when they wanted to do physical verification by the AG, they couldn't. So on that basis, they did really a limitation of scope. So to that, what they've written there is really a result of limitation of scope in terms of the asset.
We've lost you for 5 seconds.
Okay, can you hear me now, Chair?
Yes, we can hear you.
Okay, thank you, Chair. So in terms of that, we are in the process. We've appointed a company already, Chair. We are in the process of automating our asset register. And then one of the issues that we wanted to look at was in terms of the coordinates for where all our land parcels are. So that part has been done, and then we're quite comfortable that we will be done in the next financial year. When we go to the next audit, we will have all our asset register done and then automated. Same with the record management. Chair, one of the issues that I raised when I also joined was that I went to one boardroom and then there was boxes and boxes. I wanted to know, what are these boxes for? They said those are the tenders. So understanding that this means that it's a risk. I then made sure that let's quickly deal with the issue of automating our record management. So the process of record management will be done, and then we'll also automate it. So we're quite comfortable with that. But Chair, remember we're doing our audit plan is risk-based. So we've concluded our risks, and then some of the issues that are raised here, we've identified them. And then we've also made provision for emerging risks. So we're quite comfortable that our audit plan covers all of the risks that are there. And then we're quite comfortable to share our audit plan and the risk, our risk plan with the members, so that they can also have the comfort that the issues that have been raised, and then the issues that also Member Powell is worried about, they've been covered. Issues of the PPE, they've also been covered in terms of where we are with our audit plan. So, Chair, I think in the main, what we are saying is that we are not happy with our performance of 29%, but Chair, as the chairperson of the board has said, that if you look at the presentation, you will see, Chair, that in the first quarter of the previous financial year, if you look at the first quarter of the previous financial year, you will see that there's a difference, because we also saying we need to monitor ourselves on a quarter-by-quarter basis. So if you look at the first quarter now, you will see that we're sitting, first quarter we had 61%, as opposed to the 23%, and now we are sitting at 72%, as opposed to the quarter two of the previous financial year was 19%. So we are saying that we are not yet at 97%, but that being our target, we are moving too quickly to go to 97%. So the last 2 quarters that are left of this financial year will be telling as to whether, Chair, myself as the new CE and the new CFO, whether we also came to increase the problem, or we are here to resolve the challenges. So the 2 next quarters will be telling, Chair, but we're quite comfortable of where we are, and we're quite comfortable of the decisions that we've taken in terms of turning around the company. So I think the 2 quarters will be telling of whether it's just us talking or whether there's action happening. Thank you, Chair.
Thank you, CE. Honorable Chairperson, the only one thing I should add is that ourselves as the board, we are also provided oversight on, not only by yourselves, but the department has a division called Entities Oversight, which makes sure that all the boards, all the entities, they stick to their work of oversight, which is inscribed in the shareholder compact and even in the acts that established them. So I'm mentioning this to say there are quite a number of platforms of monitoring the performance of our agency that is assisting us, I think, to stay on track. And we are also very thankful of the attentive interaction we have with the entities oversight in the department that is assisting us to stay on course. Thank you very much, Honorable Chairperson.
Thank you very much, HDA. Can we then go to EAAB, Ppra? Chair.
Good afternoon, Chair, and thank you for the opportunity once again. The number of questions that were raised are mainly technical. I will only deal with the issue of the filling of vacancies. As I indicated earlier on in my preamble, that we have submitted to the Minister an organizational structure for her approval, which was subjected to rigorous interrogation because of things that we were not clear on. We are informed reliably that the Minister has now approved the structure. So we will be proceeding with the filling of the vacancies. That was the only holding issue. So in the same vein, we will be dealing with the placement of personnel, those that we inherited from EAAB. We will be properly placing them in terms of the new structure. So I think we are ready for a go insofar as that is concerned. I don't think I am the suitable person to respond to your question, Chair, about allegations that were raised against me. I'm not so sure what those allegations are, but I'm sure that the minister may be the right person to speak to that question. Personally, I'm not so sure what those allegations are. I will then allow the company secretary to deal with the issue of the rest of the questions. Thank you.
Thank you, Chair, and thank you, members. I will, as the CEO, be responding to some of the questions that have been posed. I think one of the questions that were posed were in relation to the CPD. So, Chair, what used to happen initially with the CPD, I'm just trying to clarify what were the technical issues, is that our CPDs were initially venue-based, and we would have them on specific dates, but then under COVID, we then moved to having these being done online, and we then had the services of a service provider that would assist us with providing these services. However, because of technical issues in relation to our system and the service provider system not being integrated, we would then have several technical glitches, leading to some of the candidates not being able to register or being able to do their CPD. So those were the technical glitches, Chair, that we encountered. However, this issue is being resolved together with our IT and the service provider. We can confirm that since September, I think, Chair, many of our candidates or those that are supposed to be doing CPD are already doing their CPDs. We are continuing, though, to get minor glitches, and these are then reported to the service provider, who then attends to them. And then also, Chair, I think the other question, it came from Member Powell. She asked about the online query management system. Chair, I can confirm that it's currently operating, but as the PPRA, we are faced with a number of system challenges, and we do face technical glitches. However, in order to deal with this problem, Chair, that we constantly face, we have an intervention in place. And what we have done, we have created a separate email address, which is then used by our clients where the query management system is not working, where they can simply email us those queries or emails that they would like us to deal with. We can confirm, Chair, that sometimes or most of the time it causes duplication, in that you'll find that the person has already lodged the query online, and then will also submit it via email. But I think now for us to be able to deal with the problem until we can sort our systems is to then have this avenue where we can allow the estate agents or clients to submit their queries also via email. But we are mindful of the problem, and then we are fixing the system. And also another question posed was the one that related to Rebosa. We should, Chair, just state that the PPRA and Rebosa have a good relationship. Yes, there was an action taken by Rebosa in relation to the contempt case, but we are are busy in engagements with them, and we are seeking a solution. And I think the solution is basically in relation to the payment of their fees. So we are hopeful that, Chair, we can come to some sort of a settlement with Rebosa in relation to these. And we are not looking for any court cases further than what we have already suffered as an entity. And we are then, that is why our board has been in discussion with Rebosa and also mandated us to continue to engage with the Rebosa so that we can come to a settlement in relation to the dispute relating to their fees, Chair. And then, Chair, I think the other questions, I'm going to answer them. Sometimes I'm not going to follow the order of questioning, but I will answer all of them. The youth program, which is an empowerment program under our transformation. There was a question that was raised, and I think, Chair and members, what should be noted about the failure or the non-achievement of that, should state, is that we did not have the funds that were required for us to achieve that. We are, as the PPRA, a self-funding entity. We are not funded from the fiscus, and whatever monies that we make from the registration is what we then have to use. But however, this transformation program was sponsored by Services SITA, and therefore all the funding that we got for us to drive this program was came from SITA. We are, however, Chair, as stated, I'm happy to say that we now have a transformation fund, and within that fund, we are now going to be able to drive some of those projects, because these programs require a lot of money. And within the funding that is going to come from the transformation fund, we will then see some traction, especially in driving youth employment. Chair, I don't see us having any issues again, Chair, in relation to funding. It might be that we don't meet the targets, but we will see a lot of traction, or some traction, when it comes to the programs that relate to empowering the youth. And then, Chair, also in relation to the disciplinary committees that were not in place or not appointed, I should state, Chair, that yes, I can confirm, or I should accept that as management, we dropped the ball here, where we failed to ensure that this DC committees in place, simply by ensuring that the contracts for this disciplinary committee members was renewed in time, so that we could hold the disciplinary hearings. And if I should just state, Chair, the target that we are speaking to, which was not achieved, relates to disciplinary hearings that are held against estate agents, which are usually submitted or filed by the consumers that we have to protect. And then in relation to, Chair, because I could sense that there was a misunderstanding between that process and the process of disciplinary hearings that is happening against staff. That has never been affected by the non-availability of these contracts with the disciplinary committee. It's a separate process that is driven by legal representatives that we engage as and when we require to discipline internal staff for any transgressions that have been committed. But also, just going back, Chair, since August, we did enter into contracts with these service providers or committee members, and we can confirm that we have then resumed disciplinary hearings against estate agents. They started in September, and if you look at our second quarter report, this target has now been achieved, Chairperson. And then moving over, Chair, there was a question that was raised in relation to the fraud prevention plan that was not developed, and as a result, we could not implement it, and the target was not achieved. The plan was developed in July, Chair, and is just now awaiting the approval or presentation before our audit risk committee, which has to review it. And once they have reviewed it and made recommendations, it will then be submitted for approval before the board. We can confirm that, Chair, although the plan had not been approved, leading to the challenge then, which meant that we could not achieve our target, we did, however, implement the activities that were in that plan, because, Chair, we had a draft fraud prevention plan that had been developed, but in actual fact, it had not been approved. So we couldn't actually then say, as per the target that we had achieved, because it was a plan that had not been approved. But I think another question is they wanted to understand what the plan provides for. So I can say that the activities listed in the plan is that they must be quarterly performance and monitoring of the plan. The plan also deals with control measures to prevent fraud. It looks at internal controls. It also deals with fraud detection, as well as brings in internal audit, which will also be responsible for assisting management to effectively implement the internal controls. Another issue that is listed in the plan, Chair, is the independent investigation, which will be undertaken in issues of fraud. There will be a preliminary investigation that will be done internally, and then we will then move over to have an independent investigation being conducted so that we have proper recommendations. So yes, Chair, the implementation of the plan was delayed by the non-approval, but it has not stopped the entity from internally implementing some of the implementing the plan. Hence, as the chair spoke before, we have employees who were or are undergoing disciplinary action as a result of fraudulent action that they engaged in. Especially with the SCM department, and to the extent, Chair, that when those fraudulent actions were discovered, we even engaged forensic investigation, and the report of the forensic is already out, and we are implementing the recommendations. Chairperson, I just want to, there was also a question that spoke to, I think it spoke to, just looking at my notes, Chair. The question that related to the invoicing of the property practitioners. Chair, what our previous legislation did, it provided for annual FFCs. This one provides for a 3-year FFC, and also it provides for the fees to be paid for the 3-year FFC. But however, as correctly pointed by Powell, it does provide that we can invoice annually. The difficulty, Chair, that we face with this issue, which we, although as management, we continue to look at, is that if we issue an agent a 3-year FFC, then they will go out and trade for the 3 years, and then annually we have to then keep following that particular estate agent to come and pay us the money owed for the FFC that they will be holding for the next 3 years. Administratively, Chair, this will prove to be very difficult. You have seen in some of the findings of the AG, our collection the collection of revenue has not been the best for the entity, and we do foresee, Chair, that if we do then follow this route where we will give you an FFC and you will pay us later, we will continue to have these repeated findings. We should also state, Chair, that the legislation is clear that the annual invoicing is a discretion by the PPRA. So we're not close to looking at this further. So long as we will find a suitable solution, we will continue to engage with the industry. And if it's possible for us to implement it without it causing further findings, we will then be able to implement, but it's a discussion that we will have to take with the industry. We've had their concern. I think, Chair, one of the issues that we face also is the estate agents that do not inform the PPRA when they deregister or leave the industry. And in terms of the legislation, they are supposed to inform the entity or the organization that they are now leaving the industry so that they can be deregistered. However, what we have seen, most of the estate agents, regardless of this requirement, they will then leave the industry. After a few years, they will come back and want to be registered. And the Act is quite clear that if you do that, then you will be liable for penalties. I should say that the penalties are limited in terms of the Prescription Act, Chair, and we do not charge penalties beyond 3 years. So the submission by Member Powell that the penalties amount to 30,000 is not correct, Chair. I think if Member Powell we can give her the amounts that we charge, she will be able to determine that it cannot even exceed 16,000 in terms of fines, Chair. So that issue, I think also with the industry, we are also busy looking at it. Maybe, Chair, what we can say is that yes, we have tried to make estate agents aware that they need to deregister when they leave the industry. There might be, as we have seen, maybe not much awareness in relation to educating estate agents and informing about the requirement of the Act, and we will therefore put it in as part of our consumer awareness going forward, so that we make sure that estate agents understand this responsibility, because even under the PPRA, or even under the new Act, the PPA, this is still a requirement, and if we don't resolve it now, we will continue to face estate agents that are accosted with fines when they come back, Chair. Just looking at the other questions, there was also a question in relation to the intern estate agent, which will soon be registered because they would have failed to qualify in terms of the educational requirements. We have had the industry, Chair, and what we have sought to do currently now is that under our APP, we have set dates or a number of days, Chair, sorry, that we allocate for having exams. So what we've done in order to assist this intern estate agent to be given enough time to write, we have added more exam dates so that we can give them time to write. I think we were targeting at having about 3 exam dates this quarter, but we have added more exam dates, and we will soon be communicating. This will then allow those estate agents that are ready to write to then write, and it will give them enough dates to do that. We are obviously, Chair, going to then consider at the end of the financial year, or as we said, not financial year, but on January, we will consider how many intern estate agents are still not qualified, and we will then communicate further as the industry. But one of the things, Chair, that we as an entity want to do is to ensure that we do away with all the serial interns, and in order for us to have an industry that is properly qualified as per the legislation, we need to start taking action against those property practitioners who do not aspire to continue with their qualification. It is a requirement in terms of the Act that every property practitioner must be qualified, And when you look at Section 50 of the Act, it also says that estate agents who have failed to comply with the standard of prescribed training will be disqualified. So I think that is where we are coming from and are trying to implement this legislation. But however, Chair, we will be in communication with the industry based on the outcry and see what we can do as an entity going forward. Chair, I don't know if I have finished. I just want to look at my notes. I know the other questions, Chair, will be taken by our CFO that relate to the financial aspect. But maybe, Chair, what I should then acknowledge is that as an entity, we acknowledge that we have not done what we're supposed to do. And as a result, we find ourselves with some of the targets not being achieved. And we are then working hard to get it right and ensure that when we come back at the next portfolio, we reflect a better performance. Chair, we have had challenges with our system, and this is being addressed. Currently, our subsystem is being upgraded. We've had a subsystem that is very static, and it did not enable us to at least have any add-ons that will allow us to deal with specific issues. For example, the issues of writing off debts and issues of invoicing, automation of billing. The system was not allowing for it. So the upgrades that we are busy with, Chair, will then allow the system to be able to do this. We also know that we are facing challenges or issues in relation to registration. For example, when I presented the target of 9,000 new role players that we were hoping to have onboarded onto our system, we were not able to do so because when when the system was being developed, the developer found that the rules that we are now wanting to implement in relation to bringing on board all of these property practitioners will require 4 months to develop. So that is the status, Chair, and we are in the process where those rules are being developed. But in the meantime, Chair, we have an intervention where all those new role players are being granted exemptions. So what this means, Chair, is that we have full details of all these new property practitioners. We've got their database, and once our system is up and running, all we need to do is then import the system from those exemptions that we've granted onto the system, and then we call upon those estate agents to pay us for the Fidelity Fund certificate. Chair, I think from my side that would be all, but we continue to strive as an entity to ensure that we serve the industry that we are mandated to serve. And as a team, together with the entire board, we are committed to also listening to the industry. As we implement and maneuver this new legislation, we are hoping that industry will also assist us, because this is a legislation that is new. When you have a legislation, Chair, you can understand what it is, but when it comes to implementation, it becomes difficult and it becomes different from reading it. And therefore, we are hoping that together with the industry, we'll be able to find each other and continue to work together. Thank you, Chair. Mr. Napo, you can take over. Thank you, Chair, and thank you, members.
Thank you, Acting CEO. And greetings to you again, Chair and members. I'll just touch on a few things which I suppose the CEO did not touch enough on, or sort of did not include on her response. The one is the failed target regarding the supply chain management on procurements that are attributable to specific designated group, in the main enterprises that are owned by women. We did not meet that target, but currently we are working with the SCM department to try and increase our database to include businesses owned by those specific persons from those designated group in the main enterprises owned by women, as well as enterprises owned by disabled people with physical disabilities. The database is being built and it's growing and improving, and I can attest to the fact that on our APP measurement criteria currently, the scores that we have achieved, especially on enterprises owned by female-owned enterprises, we are now meeting our target because we have signed more contracts with entities owned by people from that designated group. And also in terms of our RFQ systems, we also ensure that we give them preference. Then the next question, Chair, was on the weaknesses in the review of the annual financial statements and the interpretation thereof that was raised in the audited financial statements. Chair, I would want to bring to the attention of the committee that, as mentioned earlier by the CEO, when we were supposed to submit our annual financial statements to the Auditor General on the 31st of May, our SAP system was hacked 2 days prior to that. And we had a subsystem that was non-functional at the point when we were wrapping up the preparation of the annual financial statements and passing final entries to that effect. And in order to ensure that we become compliant and still submit to the AG on the 31st of May, we did some offline adjustments which were not on SAP. And in preparing those annual financial statements, we had to bring information from the SAP ledger systems and what we prepared offline to build a complete set of annual financial statements, which was submitted to the Auditor General with proper reconciliations reflecting what's in the GL system and what's been done offline to agree to what's in the annual financial statements. This process was reviewed by internal auditors before we submitted to the Auditor General. They brought in their comments, which we incorporated into that, and then we submitted to the AG along with those recons. And as a matter of submitting our annual financial statements supported by those reconciliations, the Auditor General then came to a point where he could accept and rely on the information that we gave them. And as indicated by the CEO, we are taking some remedial actions to ensure that this type of risk does not recur. And from an IT perspective, they have made sure that they implement some processes that will bring more security into our IT systems, like the implementation of the antivirus protection softwares, as well as implementing some firewall protection systems to make sure that our IT systems are more secured from the outside world of hackers. And also, we are running a SAP remedial project that will ensure that whatever findings that were raised by the Auditor General, which relate to the way the SAP system was configured, that SAP can be reconfigured in a way that the SAP reports can be aligned to the accounting standard provisions and requirements. And these are all done and to ensure that moving forward this financial year, whatever audit findings that we had, which are specifically aligned to the way SAP was operating or configured, will be addressed by that project. And lastly, I think on the issue of irregular expenditure, Chair, we have a plan as an organization to ensure that we try and close the gaps within our SCM system that gave rise to those type of findings. First of all, we started by ensuring that the procurement function is enhanced, and efforts were put in place to ensure that we make the procurement function become more efficient, transparent, and accountable to try and manage the cost down and also to avoid any form of fruitless and wasteful expenditure So from a procurement function, we are now at a point where we have a fully functional and efficient procurement function. However, the other things that we're still addressing with management is to ensure that we capacitate the supply chain management function with the right, correct, and relevant managerial skills to ensure that any weaknesses that came as a result of poor contract management and poor communication and addressing issues that relate to stakeholder engagement, such as things that should have gone to National Treasury and had not gone there, can get addressed and be mitigated, as well as bring a better overall supply chain management strategy into perspective. Chair, our overall aim is to make sure that whatever findings for non-compliance and inefficiencies that were raised as a result of the existence of our supply chain management and how it operates can be closed off as soon as possible, and make sure that these findings don't recur. With that, Chairperson, I'll pause there and hand back to you and to the committee. Thank you.
Thank you very much. Chair, you want to close so that we go to the next entity?
Yeah, thank you, Chair. I think we have said a mouthful, unless there are any other questions, but I think we have responded to quite a number of issues that were raised before us. So we'll take this opportunity and allow you to proceed to the next entity. Thank you, Chair.
Thank you very much. Csos Chair Mtetwa and acting and Ombudsman, Mr. Mkhize.
Thank you very much, Chair. And thank you to the members of the Portfolio Committee for their inputs and their feedback on our performance report. I will touch on a few things and the rest will be done by the Advocate Mkhize, our CE, and part of it will be answered by a CFO if need be. Just to touch on Honorable Mokhoto's sentiments about our plans around conciliation and our disputes, and to reassure him that we are now backlogless. There is no backlog at Csos. We are dealing with all current issues, and we are putting measures in place, or we have put measures in place to ensure that we do not regress. And in this regard, just mention that we have distributed the work to other regions by centralizing the dispute resolution mechanisms and ensuring that there is equitable distribution of work and not one province is overloaded. But we are also acting on our targets for establishing other regional centers so that there is more representation around the country, having put up one center in Gqeberha in this current financial year or in the past financial year. So we are on the road to ensuring that we do not regress and have conciliations into previous years. We are ahead in terms of appointment of our executive managing agents. Our challenge at the moment is having them placed, but we have made inroads and the Chief Ombud will expatiate on that. We have made inroads with all the other managing agents, the well-established managing agents, to absorb the managing agents that we have trained. In this regard, we are also looking at innovative ways of finding work for these managing agents, especially with with the work that is coming up from other entities and all the schemes that are coming up from all the initiatives that are being developed by our sister entities. Honorable Powell, we look forward to interacting with you and the document that you will send to us. Honorable Telezi, about the vacancy rate, I can assure you that we are working on that. As at the end of Q2, we had reduced the vacancy rate to 31%, having employed about 38 people into the organization. We continue to monitor this, and I can assure that the key positions have largely been filled at executive level. We were waiting for the approval of the structure, and I can assure you that there's only one vacancy there, and we're in the process of finalizing that, which is the Chief Risk Officer position. But largely, all the key positions are being attended to, and most of them have been filled already. The rest, my team will answer. Advocate Mkize, you can take over from me with the permission of the chair.
Thank you very much, Honorable Chairperson, my own chair. The chair has largely covered most of the areas that were raised. On the conciliations and adjudications and the plans, I think that has been done. We're monitoring this on an ongoing basis, in fact, on a monthly basis with EXCO, and just tracking whether we are meeting these targets. That's just a point to add there. There was an area around improvement in terms of reconciliations and compliance with the PFMA. I think the CFO did touch on that quite extensively in the audit remedial plans. We have institutionalized ongoing monitoring over and above the loss control committee that has been institutionalized, over and above just tracking how we're doing with staff, as basic as, you know, ensuring 30-day invoice settlement. So that is being tracked on a month-to-month basis, if not weekly. We're also tracking issues of SCM compliance and how the bid committees are in fact enabled to perform their duties. And we have in fact counted that with or coupled that with what we have referred to as internal probity review by our internal audit function, where all the bids are subjected to evaluation or review by internal audit before we go on award. So these are just part of the measures that are meant to improve our compliance with the PFMA and related issues. Thank you, Member Powell, Honorable Powell, for the word of commendation there and support. We quite appreciate the fact that we can be of service to our members of parliament, but also to our general public. With regards to the practice directive on POPI, we have issued it out as a draft at this stage because we're seeking to canvass, comments. Obviously, as soon as we have received those comments, we will then issue it out in final form. And I think that should happen within the next 2 months or so. So that's the indicative timeline. The issue around the internal appeals process. How are we, what is our plan with regards to that? We've received quite a lot of propositions or recommendations in this regard, but as you may be aware, this is a function of a legislative framework. It would have to be authorized in terms of our law, and therefore we would then consider this as part of the propositions in the consideration of the amendments to legislation. We do believe it will offer some relief to members of the schemes and the body corporates and trustees, etc., who may have adverse rulings against them, rather than having to approach the High Court for appeal, which can be costly and sometimes even quite lengthy in terms of timelines. So we do believe that perhaps there might be merit in looking into establishing an internal tribunal to look into appeals process. But I suppose when the matter of legislative amendments comes to the fore, that's when we would actually also deal with that aspect. So we are considering that because, you know, the only one Honorable Powell that has come up with this issue. There was a question about what do we do with erroneous adjudication orders. Well, again, this is an issue of legislation which does not have specific authority for what we call in law rescission of judgments. So we don't have an internal inherent power to actually rescind orders by the adjudication by the adjudicators, and largely because of the principle of what we call in law functis officio, which simply means that once a decision has been taken at an administrative level, then that decision maker no longer has authority to actually go back to that decision. We, however, are looking into mechanisms, and we have somewhat, without really announcing it too loudly, institutionalized some kind of rescission or review processes where there is an obvious administrative or patent error in the adjudication order, without necessarily perhaps dealing with the substance of the legal arguments, as it were, but where there's a patent administrative error, I have authorized in some respects that such orders may be subjected to a rescission process, so that perhaps another adjudicator may take care of that, or in some instances where the same adjudicator, in fact, has to correct that particular erroneous order. We have also, in addition to this, institutionalized a quality review process where we have put quality adjudicators, quality assurers that look into the quality of the orders. They look into whether the law has been cited correctly and whether the facts have been applied correctly, or the law has been applied correctly to the facts, and whether there has been consideration of precedents, etc. And they basically would come up with a quality review report, and upon that, an adjudication order is then issued. We've seen some significant improvements in the quality of the orders, and of course, this is coupled with fortnight sessions with adjudicators themselves, engaging on what's emerging and best practices, etc. These are measures that we trust are beginning to bear good fruit in relation to sanitizing our adjudication space. Honorable Malamecha, I think it was only a commendation there. We appreciate that, sir. Honorable Telezi, you asked about Csos Connect project cost. That is a massive ICT project that is costed at about 104 million rand. That project will in fact digitize and automate everything within the Csos, from records, record keeping to enlistment of the schemes and determination of adjudications and related issues. So it covers quite a number of areas that essentially would fully automate and operate on a web-enabled thing. So this, for example, would entail schemes that are not registered with us, and those that are actually coming up in terms of development, to actually engage on what we call a self-help mechanism, where they can go onto our web platform and be able to initiate the process of their own enlistment and registration. This will interface with the banking facilities that are currently being created, so that the scheme that intends to register can then, in fact, be in a position to just self-help right up to the end, to a point where the certificate is then issued out to that particular entity. And the same thing with adjudications, the same thing with the governance. There are several modules behind this, and it will, of course, integrate with what we call the ERP, and that is your support and back office support. So it's quite a massive ICT program that we've embarked upon, and we are certain that it will enhance user experience and enhance efficiencies in terms of public engagement and reduce dependency on person availability. And, you know, they say best service is where there isn't much human interaction with, where people can self-help. So that's what we're looking at. The challenges that we faced thus far essentially have been some slight delays in terms of the commissioning of some of the modules. And these have largely been as a result of some of the areas we had not anticipated, such as, for example, the banking module that we needed to incorporate. And we then discovered that, in fact, we needed to open several bank accounts that would enable clients from all the major banks to be able to interact with our system. And that meant that we needed to go and get ministerial approval and then also get National Treasury. I'm glad to announce that we just received an approval from National Treasury this very week. So which means that process is proceeding ahead. Other than that, I think it's all systems go. The issues are seeming to be under control. So the automation, I've already addressed that on November Telesi in terms of how it would help, self-help, enhancing customer experience, interaction, real-time basis, availability of information, record keeping, digital records is the best in terms of backup in case of risk, of loss of data, etc. You've got these things backed up in the cloud, and etc., etc. So the benefits are just too numerous to mention. The remaining vacancies aspect, I think the chair's already dealt with that. But we're proceeding nicely in terms of populating the new structure, in terms of the new organogram, and we are engaging also with the trade union in this regard. Thank you, Honorable Chair, Semenya, about on the commendations. All we can say is that the support that has come from your committee and the minister, as well as the department and our board, has been quite impeccable. And it has enabled us to actually move with speed in turning the Csos around with half the capacity, I think, that we needed. But we think that we're headed for better days at Csos, and performance will continue to be our underlying mantra. So thank you so much. I think that would cover the issues from the Csos side. Back to you, Honorable Chair.
Thank you very much. Csos department, acting DG.
Thank you, Honorable Chairperson, honorable members, chairpersons of our boards, colleagues. Chairperson, you requested me to respond to the allegations on the chairperson of PPRA. This process was managed by the executive authority. I'm not in a position to respond to those allegations. Just the last part, chairperson, that I can make an input in two entities, HDA and PPRA. they were referring to the approval of their organizational structures by the department. I want to confirm that those proposals of their organizational structures have been assessed by the department, and they were forwarded to the minister for approval or for consideration yesterday, and she has considered this morning. So they will respond, they will receive the outcome on their structures, on the approval of their organizational structures. Thank you, Chairperson.
Thank you very much. That was the inputs, and we want to take this opportunity to thank you, chairpersons of the board and the CEOs and honorable members for the interaction with all of us. Hands on the deck will actually improve the sector. Thank you very much. The meeting is then adjourned.
Thank you, Chair.
Goodbye.
Thank you, Chair.
Thank you, Chair. Good afternoon.